Good morning, everybody. Today is Friday, October 4th, 8:20 a.m. The reason we are live earlier today is because in 10 minutes, we are getting a very, very important jobs report, non-farm payrolls for the month of September. And that jobs report is pretty much going to determine definitely the trajectory of the market today. It will give an indication on where inflation likely is going to be as well. If we added too many jobs, maybe inflation is a little bit higher. If we added too little jobs, inflation definitely is going to take a plummet. If we get into this Goldilocks zone, which most banks are estimating 140 to 160,000, I think pretty much every bank is around 140 to 145 is what the consensus is going to be. Then that should be a good thing for the markets. S&P 500 right now is up about 0.3%. I think, again, if we get into that Goldilocks zone and the broader market is okay with the numbers that we're getting because they know that inflation is coming down, because they know that the port strike, for example, is over, which we'll talk about. We got a resolution to that last night. There is a world in which this could be a very strong Friday for October. Again, why is it important to add jobs? Because the recession narrative is contingent and has been contingent over the past couple months that people don't have a job. If they don't have a job, they're not going to be able to spend money. They can't spend money. Companies won't have good earnings. That narrative could be disrupted gigantically if we have good jobs report. So in about 8 minutes, we're going to see what happens with that jobs report. On top of that, we got Spirit Airlines that apparently is filing for bankruptcy. That stock is down 31% in the pre-markets. We got the airlines, JetBlue, that's up 5%, United up 1%. So some of the airlines, because it seems like the industry is consolidating, are getting a bump from Spirit seemingly going bankrupt. And then we have the port strike that is finished as well. We'll talk about the implications of that. But late last night, the dock workers reached an agreement with the ILA, or the employers of the ILA, and it is a 66% pay raise, not a 62% pay raise, not a 77% pay raise over the next 6 years. The average hourly wage, I believe, would go from like 39 to 65. I'll get the exact numbers over the next 6 years. However, they have suspended their strike until January 2025. That headline shouldn't scare people, though, because the last part of the negotiation they need to do, they'll be working today. So the dock workers are back working right now, is the automation stuff. So in the next 5 months, if they can't come to an agreement around automation, then yes, they will keep striking. But I'm pretty sure in the next 5 months, we will get some agreement when it comes to automation. So that also another tailwind for the market, likely why the S&P 500 is up 30 bips right now. And then finally, on top of that, outside of all that macro stuff, today is the first day that many of you are waking up in the morning and waking up to a brokerage account that has this guy at 52-week highs, Palantir, $39.54. It's pretty incredible. For those that were saying, oh, it was just short-term momentum yesterday, maybe you're going to be right. But in the pre-market so far, you are not right on that, because Palantir right here is up another 1%. It's up 82 bips, call it 1% in the pre-market. And really yesterday on the after hours, it ended at 39.40. So it closed at 39.25, but 39.40 was where it closed officially after hours. And you can see in the pre-markets, we hit 39.78. What do I think is going to happen with Palantir? I have no idea, but I do think, forget valuation, forget kind of just pure momentum. If we get a good jobs report, I think the whole market could go higher, depending on how good the jobs report is, which is obviously very good for Palantir, right? Palantir is part of the market, and Palantir might just get some momentum as well. And the fact that Palantir is up in the pre-market likely means that the momentum from new investors coming in, because someone's buying it at this price at $39.50, is very, very high. So I think it can be a cool Friday if we get some momentum from this job report. Thank you everybody for being here. Nick, Gene, Bayray, Philip, B Worthy, Bhaskar, Samir. Thank you everybody for being here today. Troy, Wong Invest, Sanjay, Matt Watson, Brad, Finance Panda. I love that. That's an awesome name, Finance Panda. Justin Bryant. We got, of course, the Tortoise Tom from Massachusetts, who says Palantir will go to $40 today. I mean, look, we're 40 cents away. So if there was a world in which we would hit 40, it is kind of crazy if it would happen today, but because we just got 39 yesterday. But I mean, the momentum seems to be there. And again, that jobs report might end up being really good. Katie, good morning. Thank you for being here. Captain Chuck, Kelvin, Arun, Chill Zone, Jonathan, Christopher, Altau, Matul. Thank you, everybody, for being here this morning. or not morning or evening for wherever you guys are. When I go to India, which is happening tomorrow, literally happening tomorrow, I will be doing the market open 6:15 p.m. my time. So it'll be really interesting to like be in the middle of the day doing the market open, but we're going to keep the show going. So we'll see kind of how I adjust to it, but very, very excited to go there. I can't believe it's happening tomorrow. You know, when you're like busy working the entire week and you have an event coming up, you kind of, I'm sure that's happened to many of you. You have something you're doing on the weekend, but you're so busy during the week, you kind of don't even think about it. Then you get to the weekend, you're like, oh, I have to like do this thing. And this thing for me is fly across the world. So that will be happening tomorrow. Bay Ray says, I'm getting kind of tired of my covered calls. It's legit only institutional buying, plus was really green on a red day yesterday. Yeah, I mean, look, the thing about Palantir yesterday in terms of its price action as well is that it closed at $39.25, which was the highest close ever. The last time we closed at $39 historically was January 27th, 2021. And we have not closed above $39. We closed $39 on the dot on that day since then. So it's been over 3 years where we closed at $39, which is a big deal. And then the all-time high was $45 that we hit in that January timeframe. And maybe today we revisit that $40 range. We'll see what happens. But I do think institutions are buying as well because I don't know if retail can just move this momentum. Oh, another thing, going back to that retail point. So again, you guys know on Robinhood, we got jobs report in 3 minutes. Robinhood shows you the net retail selling or buying. Take a look at this, guys. Robinhood on October 2nd, so 2 days ago when Palantir hit like 37.80 or whatever, Robinhood was a net seller on Robinhood of Palantir, which is pretty insane, right? I mean, look at this red candle. The past 5 days before that, there was, 5%, 10% net selling. 30% net sellers versus 70% net buyers on Hood is pretty insane, right? And that simply means that, or actually, no, it's not 30%, 70%. It's out of all the people that traded Palantir, 30% of them in general began net selling the stock, which is really interesting because then the question is, who are the people that were buying it to get the stock to go even higher if it wasn't retail? Now, obviously, all of retail is not on Robinhood. There's Fidelity, Schwab, Webull, E-Trade, all that stuff. But a lot of retail does use Robinhood. And if retail, if people think retail thinks in the same way, you can't say that retail on Robinhood is thinking of selling Palantir and retail on Schwab is thinking of buying Palantir, right? There's probably some bifurcation of that, but in general, you would imagine the sentiment kind of matches, which means retail's taking profits. And this is consistent with what Vlad said a couple weeks ago on an interview he did with Yahoo Finance. They were like, so how is retail reacting to the 2024 bull run? And he was like, dude, people are taking profits. And when there's a dip, people are buying on our platform. When there's a rip, people are selling. And if that's the case, then retail selling with Teal, with Carp. I know a lot of you have messaged me that you've sold 10, 20% of your positions, which is totally fair. And if that's the case, then someone's buying it, and either it's different retail investors or it's institutional investors. It might just end up being institutional investors. And if that's the case, then, that's a really sticky cohort of investors. And that's a very nice cohort of investors because those guys are not going to drop the stock for a couple quarters. They're going to keep it, for a long time. Gene says this week went by fast. Yeah, this week went by very, very fast. I'm only gone for 2 weeks. I'm gone for 2 weeks and then I'll be back. So it'll be quick and I'll be back right into earnings. So I don't think it'll be something too crazy. All right, here we go. We got about 30 seconds until we get these non-farm payrolls. Street's expecting 140,000. Last time we got was 142. Unemployment rate as well. I think we're expecting 4.2%. Those two numbers are going to be the most important. The other ones matter, but those two are going to be very, very important. As soon as we get those, we are going to see how the broader market reacts to it. All right, let's see. It'll load up on the screen in just a little bit. And we will get these numbers. I have the S&P on the other side of my screen. S&P right here, 570, 569.9. Up. What do we got? Do we have the number? Nope, not yet. Should be out really. S&P's up though. S&P's up. S&P's moving. So market. Okay. Oh, wow. 4.1 unemployment. Wow. That's a beat. 4.1. Holy crap, dude. It went down. Oh my God. There's no way in hell. There is no way in hell. Oh my God. Oh my goodness. We added 254,000 jobs. Okay, to be honest, I don't know if that's good or bad because I don't know. The rate cut narrative is kind of. I mean, do we cut rates if we're adding that? I still think we cut rates. I think the market's got. I think the market's struggling with that right now. The market is struggling with that. The S&P is not going to the moon right now. It's up 0.5%. I think it's kind of struggling with dealing with that. But I still think that's bullish, dude. Holy crap. 200. Dude, no one in their right mind thought we would got 254,000. I don't think any of you in the chat thought we would get 254,000 jobs. Oh, CNBC must be freaking out. CNBC must be freaking out. So there's no way, dude, 200. I mean, you could also say that, okay, even if you get a revision, though, let's say the number is fake. The revision's not going to go all the way down to 100,000 jobs. Like, even if they're revised, maybe they take off 59,000 jobs, which is a significant percentage of the 259. You still added 200. Economists thought we would barely get 140. Holy crap, dude. Where's Palantir? Palantir's at 39.63. Palantir likes it. They're up 1%. Let me go through the pre-market, then we'll try to analyze a little bit more. 39.62. Where's Robinhood? Robinhood 22.71. Tesla's up 1.5%. IWM's up 1%. QQQ's up 0.5%. Meta is up 0.5%. All right, let's go to CNBC. Let's see how they're thinking of this. Wow, I did not expect that number. That is one hell of a number. Here we go. Yields are spiking. Dude, that is, I don't really know what to feel on that. I think that's good. I would imagine it's good.
The numbers. Let's bring in our jobs panel. Wendy Edelberg, senior.
The surprise today, but this number is checked on the marketplace. I think the actual unemployment rate, if it moves higher, that'll be a big deal. If it stays the same or moves lower. But I think that the actual jobs number is going to come in better than expected. That's what I would think. Report, the over wins 254,000, significantly better than 150 expected, and an upward revision to last month from 142,000 to 159,000, which means the 2-month revision now is a little over 70,000. If we look at the unemployment rate, it is at 4.1. 4.1, it moved lower. I can hear yields moving higher as we speak. And 4.1, of course, equals where we were in June. You have to go to May to get a lower number at 4%. Average hourly earnings month over month, better than expected, up 0.4%, which equals where we have been in May. You have to go back to the beginning of the year, January, when we were up 0.5%. Now, if we look at average hourly earnings on a year-over-year basis, this number also much better than expected. 4%. That equals where we were in May. You have to go to March to find a higher number at 4.1. The work week, 34.2, which makes it actually a 10th less than expected and a 10th less than the rear view mirror. To find a lower work week, you have to go back a long way. You're going to have to go all the way back to 34.3, which is going to be in February of this year. And finally, the utilization, the labor force participation rate, 62.7. It's been holding there. Not a bad number. 62.7 is actually the best number of the year that we've seen on multiple occasions. You have to go to November last year to find a higher number at 62.8.
All right, so let's talk about this a little bit, then we'll get some insight from their panel and see what they're saying. Yields right now, where's the 10-year? Man, yeah, 10. Fuck, dude. I don't know fully if this is amazing or not. 10 years at 3.9. Folks, we haven't seen the 10-year closing in on 4% in how long? Last time we saw this was October 7th, which was 2 days after the yen carry trade. What do you guys think? Good or bad? Good or bad? Even if the numbers are cooked, like they can't revise it to the point where for them to revise it against the expectations, they would have to take off 95,000 jobs, which maybe, but apparently if what I was listening to is correct, they revised last month's numbers up. I'm gonna see if I can find that exact number. Average hourly earnings year over year came in at 4%. That's higher than the 3.8%. Average hourly earnings month over month came in at 0.4. That's also higher than 0.3, but lower than 0.5 last month, which technically means people are getting paid a little bit more. Non-farm payrolls on the private sector were 223,000, and government payrolls were 31,000. So America, or the market expected America to add 125,000 jobs in the private sector. We added 223,000. Again, if they're juicing up that number, that's you know how like when you cheat on a test in high school, if you've ever cheated on a test or in college, like you're not supposed to like get everything right. You know, if you're cheating, because your teacher's obviously going to know you're cheating. You settle for a B- instead of a AA+. Yeah, if they were going to cheat, they should have added 170,000 jobs, 180,000, 254,000 is like, all right, dude, it's obvious if you're cheating that we know you're cheating. So this is just I did not expect this type of a jobs report, but it's pretty incredible. Meta almost is at 590 in the pre-market. SoFi is up 2%. SoFi is closing in on $8. Nvidia's up 1.2. S&P is up 0.5%. I think also S&P would be surging higher if the Israel-Iran stuff wasn't as bad. There was a new headline this morning. Basically, Iran said, hey, we're going to attack Israel if they do anything, like if they try to attack us back, and we're going to attack their energy ports inside of the country. So that is something the market might be reacting to. Let me check oil prices. Oil right now, it's kind of flat. It's up 30 bips, 73.96. It was up 5% yesterday. It's kind of chilling out right now. But I think that piece of uncertainty is kind of making the market a little bit scared, at least the S&P to go higher. But Palantir is at 39.80. Again, that jobs report is signaling the idea of a recession is going to be very, it feels low, the chance of recession. If 254,000 people got a job last month, that's a lot of people that have disposable income to spend. Robinhood is at 22.75. It's up 1.43%. I did buy Robinhood yesterday. I bought about 100 shares around 22.29. Tesla up 2.26%. Amazon's up 2%. Qs are up 1%. AMD's up 2%. Rocket Lab's up 2%. Bitcoin, I would think Bitcoin would like this a little bit more, but the reason Bitcoin might not like this is if the rate cut is in jeopardy right now, which is why Bitcoin might not be going much higher. Reddit's up on this news. And again, Tesla right here up about 2% on the news. Shouldn't SoFi pump? Well, here's the question, guys. What do you guys think? Here's the question. Do you still think we get 50 bips for the rest of the year? Oxy is also up 0.5% right now. Do you still think we get 50 bips for the rest of the year if the jobs growth that we're adding is so strong? Here's my perspective on this. I actually think it's not that complicated. As I'm thinking about it right now. If we added 254,000 jobs and inflation we see is so sticky, and we have 2 more reports until the Fed's next meeting, and it's really sticky over the next couple of reports, then I think there's an argument that we're adding too many jobs. However, 254,000 is not like 2021 numbers when we were adding 500,000, right? This stuff over time is much smaller compared to what we've been adding before. Yeah, I mean, take a look at this. I'm looking at this right now. September 2021, we were adding like 800,000 jobs. I know we were recovering from the pandemic, but still, we were adding, look at this, 670,000, 300,000, 500,000, 400,000, 900,000, 465,000. So that's when we were adding a ton of jobs. That's when inflation was really accelerating in 2021. I know it was also because of the stimulus checks. But here's my thought. If inflation doesn't reaccelerate over the next 2 CPIs because of the amount of jobs we're adding, the Fed still is justified to cut by 50 bips. Palantir right here, 39.84. If inflation if inflation gets closer to 2%, we're at 2.5 right now. I still think you can't have a federal funds rate that is double the inflation rate, more than double the inflation rate, because it's just becomes too tight, and you're risking inducing a recession. But maybe if we get really good job numbers again, the Fed's like, well, we don't really need to be as aggressive as 50. We can just do 25. That can also, potentially be an argument. A lot of you still say 50. I still think there's a shot we get 50, because also Jay Powell still wants to have a soft landing, and a soft landing, this helps him get a soft landing, but you also don't want to let things get too bad, which means you don't want to wait for cutting too long. And the administration has been pretty obvious that they don't want to wait for cutting too long. So I still think that the rate cuts will be happening over the next couple months. Let's get some more reactions to this and see what people have to say.
Start with Steve Leisman, and so much for the Fed having numbers in advance that they know we're going to be weak. But also, Steve, is the whole asymmetric risk now in the labor market versus inflation?
Yes, that's where we're at.
But that makes sense. I mean, don't you think?
I don't think so. Let me explain why. First of all, do you hear me muttering when I say?
Oh, I hear you muttering a lot.
I say, Rick, tell me about labor supply. Boom, he gives me the labor capacity. Rick, tell me about. He's so good. Anyway, I just want to spend a moment to compliment. So here's the deal. The job gains were where we see this looks a lot like a pandemic era report. 78,000 in leisure and hospitality, 71,000 healthcare and social assistance. That in my book is like 150,000 or the biggest part of it. Construction also up 25, especially trade contractors. That was the big deal right there. And that may have to do with the government programs for infrastructure. I don't know about you guys, but when I drive around here, all I see is construction all over the New York City area here. Yep. So that's part of it. There's the story for the Fed here is if you have the labor supply to meet the labor demand, that is not inflationary. Now, you did have a pop in wages. We'll see how long that lasts. The story is one of looking at inflation. And to use a word that I think the Fed chair has used, recalibrating the funds rate to where the inflation rate is. And that's why rates should still continue to come down.
I agree. I basically agree with exactly what he's saying right here. If inflation comes down, you need to recalibrate the federal funds rate to also come down because it doesn't need to be double the inflation rate, even if we're adding more jobs than expected.
But as Rick pointed out, not in 50 basis point increments.
Can I just ask, we're looking at this without even knowing any of the impact from Hurricane Helene. We just had someone on set with us talking about this destruction being the broadest, widest they've seen. Someone who's actually doing the reconstruction there, the demand that this is going to require over 600 miles plus of area in the United States.
I think it's bigger than. I think we're talking about the Panhandle when he's 600 miles in Florida, right? I think
he was talking
the swath in the middle of the country is even bigger
like
and worse.
A straight line, 600.
Oh, right. Okay.
Before you get out and how wide and how broad it is. But when you say it's okay if labor supply meets labor demand, how can that be possible with the destruction that we're talking about?
I don't think. Look, I think it's going to cost a lot of money. I'll back up. There's a decline in economic output as a result. That could be an offset to the increase that's generally, I'll say one quick word about this. I know we went to the panel. I spent 22 years at CNBC telling our bosses that even though the video is great, these big natural disasters don't amount to much when it comes to the macroeconomy. That's usually been right. And it's usually right because these big storms, they hit cities and cities have the infrastructure to fix them. I don't know the economic impact of what just happened with Helene in these outlying areas over such a vast swath that could both depopulate certain areas and require massive amounts of infrastructure. So I'm going to take a pass on your question, Becky, and tell you you're right to question it, but I do not know the total net on Helene because there's a decline in output and there's an increase in the need to spend a lot of money to fix it. So I'll leave it there.
All right, let's get to our panel. We'll start with.
So we'll go back to that in a second, but I mean that is a good point. We don't know the impacts of the hurricane yet. Maybe the jobs number is actually what we needed because if the impact of the hurricane is going to lead to decreased growth or just people that don't have jobs in the next month for the next report, but given the severity of the hurricane, then it'll be offset by the fact that we added 254,000 in September. A couple stats on this. Food services rose by 69,000 jobs. They were averaging 14,000 jobs per month. They just added 70,000 jobs in September. I don't know why restaurants added 5x the number of jobs in September. I have no idea why, but that's what happened. Healthcare added 45,000 jobs below the average of 57,000 in September. Over the month, employment rose in healthcare home services by 13,000. Government, 31,000. Government used to have 45,000 a month, so this is lower than what they usually have. Construction got 25,000. That was a big beat over the 19,000 historically it gets per month. And then average hourly earnings for non-farm payrolls increased by 13 cents. So the average hourly worker in the United States of America makes $35.36 an hour. And that's what we have here. 254,000, man. That's a lot. Barry says, didn't we want unemployment up so Feds lowers rates? No, we don't need bad news to lead to good news on inflation because inflation is down significantly from June of 2022. It's not that same, in my opinion, paradigm anymore. We need good news because it will lead to more good news. But, I think because we all haven't seen a number like this in a while, the question is it so good that it's going to lead to not cutting rates? I don't agree. I don't think so. I think Steve is right. Like it's going to be 25 basis point increments because you can't have inflation at basically 2% and the federal funds rate at 5%, but it's not going to happen in 50 basis points increments, right? It's gonna happen over 25, which is what J Powell already said. Meaning J Powell probably said that because J Powell probably said that 3 days ago when we watched it on the market open at that conference, because he probably knew jobs were going to be better than expected, and he understands that we can't do 50 every single time. S&P's up almost 1%, 572. Again, all-time high is 575, which was that on Monday. We'll talk about the port strike in a little bit. That is done as well. Palantir right here is at 39.84, and Robinhood is currently at 22.87. S&P 572.2.
I see your name up here on my teleprompter, Wendy. So let's go for it. What do you make of this? Pretty good report.
It is a good report. And I think Steve's exactly right that we need to understand these numbers in the context of what we know about labor supply. The 3-month average of payroll job gains has been about 185,000 by my calculation. That is darn close to what I estimate is the break-even rate right now, given what I think I know about the growth in labor supply from the surge in immigration. So our economy is doing a fantastic job of absorbing these immigrants, and this labor market's doing well for both U.S.-born workers and for foreign-born workers. This is great news.
Joel?
Can I add just one thing real quickly to Becky's thing, which is we also don't know about productivity. So the wage number may be in line with productivity plus inflation. I'll leave it there.
Okay. What do you think, Joel?
Well, what I was most interested in were the full-time jobs numbers, and it appears that we've seen a bit of a diversion from recent months. Part-time jobs actually shrank, which added to the number of full-time jobs. And my concern arises just from the fact that over the past year or so, we'd actually seen a decline in full-time jobs of around 900,000. So this was encouraging. But what most I'm concerned about long-term is that, when we talk about the different economic proposals put forth by the two candidates, I'm really concerned about how those policies are going to go to really play forward in 2025.
Sarah, I made the point that the Fed has focused all of us on possible weakness in the labor market and sort of the notion that not inflation has been put to bed, but that the risk lies in a slowing labor market. With everything we're seeing, I don't know what happens in the Mideast or oil prices, and we had the port strike, which, gratefully looks like it's been settled. But are we back to at least 50-50 on the dual mandate? I mean, isn't inflation at least as important as worrying about weakness in the labor market?
Well, the Fed has been clear that they've shifted to a focus on the labor market and concerns about it cracking. And obviously this number is not showing that today. It also tells us that the August rebound in payrolls was not a blip. Healthcare and government has been what has been weak recently within the payrolls numbers. I didn't hear those numbers just now, but I assume that those have rebounded a little bit going forward. So what does this mean for the Fed in November? I think we are moving back to perhaps a 25 basis point rate cut instead of 50 for November. But the market, if you look at it, even though it likely will be strong today, it's been pretty defensive recently under the current. And that's because people are worried about this geopolitical issues. Oil prices are increasing. Also, the election is coming up. But as you said, Joe, oil prices going up, average hourly earnings at 0.4% higher. This is all inflationary. So I think the Fed needs to move back to a little bit more of a balance. It's not just about the labor market. It's also about watching inflation going forward. I think both of those are going to determine the cuts going forward, and that's likely going to be 25 for November.
And look, the reason the market doesn't care about the fact that it's going to be 25, Robinhood right here at $23, is because J Powell already said that. J Powell already said that. So here's how I'm synthesizing this right now. We added 254,000 jobs. The market thought we would add 150,000. We could get rid of 100,000 jobs. For everyone who doesn't believe this number, which I think it's very fair to have that skepticism, we could get rid of 100,000 jobs and revise it to the downside. We would still come within expectations of the market. That's how big this jobs number is. That means that maybe you see an uptick on inflation. Again, I say maybe there because there's so many forces like oil that's counteracting the massive amounts of inflation we've seen over the past couple of years. And so I still think inflation comes down, but let's say it's a little bit sticky. Okay, then you don't cut by 50, you cut by 25. All right? You cut by 25, right? And Jay Powell told us this already. On Monday or Tuesday, when we watched him talk at that National Business Conference, he told us that it's likely going to be, he quite literally said it's probably going to be 25 and 25. I mean, he would not be that blunt if he did not want to, dampen people's expectations. He wanted to set things straight. And by setting things straight, he basically gave the market the expectation of, okay, we're going to get 25 and 25. Futures on the Fed probabilities for a 50 or 25 cut, yeah, it just went to 89%. 89% of market participants believe that we will get a 25 basis point cut over 50. That number was 60-30. Now it's 90-10, basically, from 2 days ago. Where's small caps? Palantir right here, 39.86. IWM is up 2%, which is good. Benny says small cap should be down if rate cuts are slowing down. Well, again, this goes back to what Jay Powell said on Tuesday. He already primed the market to believe we were going to get 25 and 25. So if, again, the market's trying to figure out new news that they didn't know, which, by the way, when we talk about the port strike in a second, I found out something yesterday that's very interesting around how the market interpreted it. If the market already knew on Tuesday and priced in 25 and 25, yes, small caps are contingent on rate cuts, but now the market is valuing small caps in accordance to what they priced in, which is 25 and 25. Today's jobs report didn't do anything but confirm that. Now, if we added way less jobs than expected, then the market would probably be taking small caps even higher, theoretically, even though it's weird, right? Because if we're adding a lot less jobs, maybe that's more recessionary. But they would maybe even take them higher because we're definitely going to cut by 50, right? Because Jay Powell doesn't want, like, if we added like 50,000 jobs, that would be very bad. We would probably cut by more than 50. But that's not the case. So I think right now, small caps are up right now based on the assumption that things are going according to plan in regards to the broader rotation thesis of different sectors of the market. And 25 is still good for small caps, even if it's not 50, and more people having jobs. Small caps need people to work, right? Like, people need to be working, and the economy needs to not be in a recession for small caps to do well. If we're in a recession, that's obviously not good for small caps at the end of the day. So I think that's why small caps are getting some love right now as well. And that's helping. That's helping a lot. That's helping this market a lot. Artist here, thank you for the $10 super chat. I appreciate that, Artist here. Thank you for being here this morning, and thank you for the super chat. So again, if you disagree with these job numbers and you think they're fake, I'll give you that. 10-year right here at 39.4. But if it is revised by 100,000, it still comes within expectations of what the market wanted, which is, I mean, it's just one of those things where this is a number that's a really, really big number in regards to how the market thought the jobs report was gonna be. Showing the economy is resilient and the economy has some momentum. All right, so let's talk about the port strike. Again, the bear thesis I still think has legs. It's just getting harder and harder to buy into. That is my perspective on the bear thesis. It has some legs, but when we're adding 254,000 jobs, dude, it is really hard to like think that it's able to easily assume things can get super bearish. But yeah, that's the jobs report, and it seems like we are adding a decent number of jobs in the United States. All right, port strike. So this was pretty interesting yesterday. I don't know how many people caught Goolsby's comments on the market close. I talked about it, but if you missed it, this was just this explained everything to me. So Fed President Goolsby came out yesterday at some talk that he gave, and he said that retailers already knew about the port strike supply issues in advance, and they stocked up supply for 2 weeks. This is another example of the market knowing things before everybody else. Palantir 39.89 in the pre-markets. The market hit all-time highs the literal day before the strike. And because the market hit all-time highs the literal day before the strike on Monday, I was wondering, wait a second, how is the market hitting all-time highs the day before one of the worst inflationary strikes is about to take place? Well, it's because the market knew they had a buffer of 2 weeks. Think about how crazy that is. The market knew they had a buffer of 2 weeks before the strike got really bad, which is what my assumption was on Tuesday. Like on Tuesday, when the markets were up in the pre-markets, the only thing that took the markets down on Friday was the Iran-Israel stuff. But we had just started the strike, and I'm like, wait a second, the strike is bad, obviously. Why are the markets up? It's because they priced it in. And I don't know what they priced in, but apparently they priced in a 2-week buffer of companies having enough supply to deal with the demand that they would get in the case of not having the resources to their facilities. And they were good to go. It's not even been a week. It's been 3 days, and we have resolved the strike. Now, here was the tentative workers agreement that was able to resolve the strike. The tentative agreement would increase workers' wages by 62% over the life of the 6-year contract. This represents a significant increase from the shipping industry's group's offer of a 50% wage increase earlier this week. So they offered 50%. They rejected it. They wanted 77%. The union had been pushing for a 77% pay hike over 6 years. They settled at 62. So not 50, not 77, but 62. The tentative agreement would bring the hourly wage for a top dock worker to $63 per hour at the end of the new contract, up from $39 per hour under the expired contract. So 39 to 63, not a bad gain in wages. And that has pretty much settled the strike. Now, the dock workers did suspend their strike till January 2025, but again, that's because they haven't agreed to the automation part of the new contract. They have 5 months to resolve that. And I believe that, they will resolve that, which means the market's probably not worried anymore about this port strike that's going on. So one of the random things that happened in October, which was the port strike, that seems to go out of the way, seems to be resolved. Now, we still have Iran, Israel, and we have to see if that ends up becoming bigger in October. But at least one of the major uncertainties of like what's going to happen with this port strike, the market apparently didn't even care. Like the market had priced in that the port strike would not be that big of an issue. Robinhood right here, $23.08. This is obviously very bullish for Robinhood. Also, one quick update on Robinhood. Margin is coming to the UK. So late last night, I tweeted this at 1 a.m. Robinhood is now launching margin lending in the United Kingdom. Again, I know that Robinhood is not really succeeding in the UK. I totally get that. A lot of you are from the UK. You've told me that Robinhood really doesn't have a chance there right now. I totally get it. They need to do options. They need to have ISAs, all that stuff. But this is a good step for Robinhood investors to see that they're beginning their expansion of new features into a new location. And the one thing I think people need to be a little bit more empathetic for a company like them, they're not like Instagram that can just launch in, a country, even though if Instagram launches in Europe with some features that might not be GDPR regulated, that's not going to be good for them. But and just get users. Like there's a lot of financial regulations, especially in Europe, and you can't just like launch and have people deposit their money and everything's good, right? There's a lot of hoops they have to jump through. So I think what I take away from this as an investor is, okay, they're not succeeding in the UK at all. Totally understand that. But they're trying and they're taking steps to start becoming a player, which means over the next year and a half, if they can figure out how to, at least take some market share in the UK, I am more excited for how they're going to expand to Singapore and Canada and India and all these other locations, right? So to me, this is a case study. Palantir $39.91 right now in their strategic expansion plans and how they can use that experience and that R&D essentially to be able to expand to other places. So that was the update on Robinhood. That's very bullish for Robinhood. Vlad is going to be on a new podcast with Harry Stebbings. He is a podcaster in the UK, actually, probably going to be talking about the UK launch there. And he runs a podcast around venture capital. So that'll be an interesting podcast that comes out probably next week. And then obviously the jobs report is very bullish. Where is Palantir? Palantir right here, $39.90. Either at the open we get dumped, like at $39.95 or whatever. There's like a lot of sell side pressure that just comes in and takes profits, or the momentum carries on. The jobs number from an algorithmic perspective takes stocks higher, which is a tailwind for Palantir today. And then the actual sentiment itself can take Palantir a bit higher just because, now if you thought 35 was FOMO, I mean, $40 is FOMO as well. I mean, $40 is a different type. It's a different type of FOMO right now as well. Where's Rocket Lab? Is Rocket Lab liking this? Rocket Lab. Yeah, look at that. Rocket Lab 3.68%. SoFi 2.3. SoFi back above $8. Meta 586. Qs are up 1.2. Where's the S&P? S&P's up almost 1%. Nvidia's up 1.6. CrowdStrike's up 2%. Where's China? China's up 2%. Alibaba, FXI's up 4%. AMD's up 2.3%. Rivian's down 6%. Why is Rivian down 6%? By the way, did you guys see Celsius yesterday? I think it hit below 30. Celsius got a bit of a hit. Rivian just cut their annual they cut their production forecast. Yeah, so instead of 49,000, they're going to do 47,000. And their delivery, instead of 52,000, they're going to be 50,000. That's why Rivian's down 6% right now. I mean, I don't know, dude. But Rivian's bottom feeding right now. You have to believe they'll make a gross profit on their cars. They haven't done that for years. I don't know if they're closer to getting there or not, but that's the risk with Rivian. And if you lower your forecast, then that definitely doesn't help you either. So Rivian right here down about 6%. Or 7% right now on the day. Fed Williams speech. Is he on CNBC talking? Do we have him talking on CNBC? I don't think we do. We'll get the quotes from what he has to say if he is talking. He probably is talking. He might not be on TV talking. Yeah. He's not talking. Okay, so we'll get the quotes from him. We'll get the quotes and see what he has to say as well. Kenneth says, I'm all for the automation of ports. I'm tired of waiting for those slackers to get to work. At any time, there are 4 to 6 people standing around to complete a 1 to 2 person job. I mean, look, I think the broader, world has realized that that type of a job is one of those jobs that is just a job that can be automated away, right? There are elements to that job that probably, I mean, we saw the video from China, right? Where people are literally using joysticks to control the automation of it because they've just had technology that's so advanced. You don't literally need people at the ports picking stuff up and putting stuff away. And so that's where the humanoid robotics thesis comes in as well, outside of just like general automation. But if I had to guess, I think by January, they'll sign an agreement that says, hey, we won't automate for like the next, 7 years. And in the background, they'll be getting ready to automate. And once that employment's up, they're going to start unleashing that. So the next time these guys go on strike, they're going to be like, hey, like you can go on strike if you want, but we're ready to automate. I think that's how it's going to play out over the next decade. And I think that's not just for the port workers. That's going to be for a lot of companies that are trying to automate as well. Man, wow. If you're just joining, 254,000 jobs we added in the United States of America. Robinhood right here, 2308. Palantir, 1.68%. All right, do we get to 40 today? What do you guys think? Do we get to 40? Put in the chat if we get to 40. So why is Palantir up 5%? To give a quick TLDR from the 2 reasons that I have for why Palantir is potentially going to hit $40 today. First one, OpenAI had $157 billion valuation confirmed yesterday. If that's the case, I think the public markets are looking at the private markets in regards to the thematic of AI, and they're saying, hey, if OpenAI is worth $157 billion, they're not profitable. Palantir is worth $85 billion, they're profitable. They're unlocking enterprise AI, which is a $1 trillion opportunity. Like, why don't we take a bet on Palantir? So I think that is a tailwind going for Palantir. Number 2, NVIDIA, Jensen Huang, and Accenture, they launched a go-to-market partnership on unleashing generative AI tools and workflows in the enterprise. I think the market bought NVIDIA on the news. They bought Accenture on that news. But they also bought Palantir on that news because Palantir is the enterprise AI player. Again, when it's in that bucket, when it's in that thematic, if things go, it's just like if Bitcoin goes up, Robinhood goes up, right? It's like in that bucket. It's kind of algorithmically tied to a lot of these things that happen, even if it's not fully tied to how different things react. And so the market was like, all right, well, enterprise AI, Palantir's an enterprise AI. NVIDIA launching this massive partnership for enterprise AI. Palantir should benefit from that because that means there's more demand for enterprise AI. So Palantir should show higher growth numbers. And boom. I think they're front running a higher growth curve coming in the next couple quarters on Palantir. And that's why they're buying the stock. So we got our boy Kris here, who's a little upset right now. I don't think Kris believes in this valuation at all. I don't think Kris can handle it. That's okay. Sometimes it's not meant to be handled. Sometimes you just got to observe and watch it happen. Dude, it's pretty cool, dude. It's pretty damn cool. 39.87. I mean, who would have thought we would be staring at this number even a year ago when the stock was 16? And I think the reason a lot of us had conservative estimates in terms of where it could end at the end of the year is simply because like it took so long to get out of the $8 range, so long to get out of the $14 range. And so you just don't expect it to go from like 20 to 40 that quickly. But then again, sometimes exponential technologies and market sentiment can take it there, and rate cuts, right? And I think a lot of those tailwinds have come together when it came to Palantir this year. Kris is upset. Sachin says, seriously, we are asking for 45 and you were surprised on 40. I was asking for 45 back in 2021. I was like, let's go to 45. But like now, I was so humbled in 2022. I was scared, ask for these high numbers. And now it seems like we're getting it. It's pretty damn incredible, dude. I mean, shout out to Sachin as well. Sachin was there. I think Sachin went all in on his public portfolio when it was $16. You guys all know Sachin. He was on the Palantir Weekly for like 50 episodes back in 2022, 2023. And I think when it was 16, he's in Malaysia, but he took his US portfolio and just dumped it in Palantir and doubled down. And it took a while for that to pay off, but now we're seeing, Palantir at levels that we haven't seen in over three years. What do you think about Celsius? Let me pull up Celsius. $30.24, up 1.68%. I got to do some deep digging on the numbers. I have a lot of people that like it and they keep texting me about it. And they're like, hey, under 30 is a steal. I don't know. I got to do a little bit of deep digging on this. I did a podcast with Amir yesterday. You'll see in the podcast. By the way, Kris, I'm going to call you right now. I'm going to get your thoughts on non-farm payrolls if you can pick up. Amir tried a Celsius live on the podcast for the first time, and that'll be posted next week, and he did not like it. And so I think he also told me in Sweden, which is where he lives, there's this other brand called Noko. Have you guys heard of this? Noko, and that's like going crazy in terms of sales. So I don't know. Internationally, I don't know how large the growth story still is currently right now for Celsius. Okay, so let me call Kris, get his thoughts on what's going on. Noko, right? Noko? Yeah, it seems like a lot of people, at least in Sweden, like that one as well. Chris Patel, what's up?
What's up, dude? How's it going?
So, non-farm payrolls, 254. What do you think?
It's kind of crazy, dude. It's like way over the forecasted amount. I mean, the 10-year is already up 9 cents this morning.
Yeah.
Not 9 cents, 9 basis points. So it's almost at 3.94. I mean, this is not good for a lot of companies that were pretty much banking on the Fed really being pretty deep with their cuts. But I mean, this is how it is sometimes, right? The data sometimes comes up really weak and then it comes up really strong. And some of the times the data ends up not supporting your thesis. So I'm a little bit, I'm happy that I called out like some of the people that I know that have been kind of long on TLT because TLT is probably going to take a nasty hit today.
Yeah, that one TLT, it's down 1% already. Yeah, so because the probability of rate cuts have come down. So okay, so do you think the 254 is fake?
I don't think it's going to be. I don't think it's fake, but it's definitely going to get revised down. I mean, that's been pretty much the status quo for a while now. You know, so
okay.
I mean, unemployment is down. Also, unemployment is down to 4.1. So. This pretty much means the Fed shouldn't even cut.
But hold on. But we're gonna get CPI closer to 2. Fed's at 5. Like we still.
Wait, hold on. Who said CPI is coming to 2?
I mean, it's at 2.5. What I mean is by November, it should be closer to like 2.1. Hopefully, right? 2.2, 2.3.
No, it's not even, man. It's at this point, you've got wage increases getting pushed everywhere. You've got kind of like a little bit of issues with oil coming up now, right? So I don't think we're going to get as deep of a drawdown in inflation as people think, you know, but long term, their demographics are definitely on the opposite end of that, where basically, you know, where the populations are declining. So that should eventually factor in. So
do you still think we get 50 bips by the end of the year in cuts?
You know, if you would have asked me that 48 hours ago, I would have said absolutely, but I don't know. I really don't know. You know, we could see a pause. Like, right now, the Fed is going to have a really hard time justifying another 50 basis point cut, you know, even if it's 25, it's going to be hard for the Fed to do it, especially with, like, because right now, with unemployment going backwards, like down right now, that's not good. That is not.
I agree, but I know, but I think the soft landing is more so contingent on like good data, and as long as inflation comes down, which I agree that's what we got to think about. If the Fed keeps waiting to cut because it's too good, but it's not like overly good, right? It's not like 700,000 jobs added in a month or anything. They could still risk the risk. Isn't the point of the soft landing to make it on time to the party, even if you're a little early, versus be late?
Maybe, but remember, what was the reason for the 50 basis point cut?
The labor market. Yeah.
Right. So then why would you think that now all of a sudden the labor market doesn't matter anymore? You know, if anything, like I said, they need to just, at this point, just pause. Like, let inflation keep coming down. 2.5% inflation is not bad. You know, that's like actually pretty normal. Like historically, that would be like your ideal normal amount. So yeah, see what happens.
All right, Chris. So I know you're in the bear dens right now. You're in the bear's den right now. Given we've got a stock closing in on 40. So
I want to short Palantir.
Okay, I was going to ask. Do you want to say anything about it, or do you not want to say anything about it? But go ahead. What are your thoughts?
I want to short it so bad. Like, I see the euphoria. I know that, like, I've brought up the valuation thing and I've been wrong about it. But look, this is just how sometimes the market is. The market can get overly extended, and right now the narrative that's being pushed out there is just so freaking strong that Palantir is going to come and conquer the world, and I don't personally believe it. I think that they're a great company, but just you're literally paying for 2028 values right now. And the thing is, this is how the markets overreact. They overreact to the upside and they overreact to the downside. So
let me ask a couple questions here. You've been in the markets for a while. You've obviously seen things that have been irrational. I agree with you. The valuation stretch. I think every bull agrees with that. Is there any part of you that's looking to the fact that the market just believes AI really will become that big and 80 billion is not that little to pay, given the growth is going to accelerate to levels that maybe match NVIDIA's 70-80% growth one day for Palantir?
Well, I think AI in general is going to be a growth industry for I mean, as far as I can see, it's like similar to the internet. The problem is the valuations sometimes get overly optimistic. And right now I'm still not seeing all the crazy AI innovations that are supposed to come out and change my life. Like, other than, hey, like, some basic search items and grammar corrections and stuff like that, I don't necessarily use a lot of AI. I mean, what AI product do you use to make your life easier?
Well, I use ChatGPT, but I think that's irrelevant. I think it's about
no, but what do you use it? What do you use it for? What do you use?
I ask it questions.
So basically, you're saying that this is the future?
No, I'm saying the enterprise application. I mean, like, I know you saw some parts of AIPCon in hospitals and energy. Like, that stuff is far beyond what I'm doing with ChatGPT, and that's where the real value is, right? That's my point. Like, do you think my point is, do you think the market is thinking if OpenAI is worth 150 billion, Palantir's unlocking real value, not just a $20 a month subscription that deserves, even if it's quote unquote overvalued, a higher premium than what they've been giving it?
Yeah, I mean, by association, Palantir is definitely getting bid up. So it's basically like anything with an AI attached to it is getting bid up significantly, right? So any company that has like the badge of AI is definitely getting a higher premium. The problem is it really deserved? And I don't think it is, to be honest with you. I really don't.
Well, what do you think Palantir should be trading at right now, given their 27% growth?
I mean, the real question that you have to ask yourself right now, Amit, is how what's the word? How genuine is this growth spurt that you're seeing? Okay. The reason why I say that is because a lot of this stuff like AIPCon and all this AIP stuff got released. And I think the overall excitement for this new product was really good. And they had a lot of pilot projects, but I always go back to that one question that analyst asked Alex Karp, and that was, what is the retention on your clients, after you've had all these pilots come on? So I think they benefited significantly from having a very weak comp from last year. And then on top of it, they had a new product launch, which was actually very successful in getting a ton of people to join as a pilot project. The question is, what is that retention going to be like? And not to mention, they're hitting all the smaller and mid-sized businesses and companies right now. Who's left after that? So I don't know. We'll see what happens, but I don't think that the growth rate is sustainable. And I think any basic indication that the growth rate is going to slow down even slightly is going to end up causing this company to, the valuation to kind of reset to much lower. So we'll see what happens, man. We'll see what happens.
All right. Any other general thoughts on any stocks that are on your mind right now that are grabbing
China, bro? The China trade is not over. China's where you want to be, man. I think so many people are missing out on China because of, I don't know whether it's their own political ideologies or other things, but I'm long on China. I'm actually looking at some ETFs right now that I'm loading up on. I've done well on the Chinese trade so far. I took some profits, and I'm going to load up on some more Chinese stuff. So I'm pretty much bullish on China for 2020, the end of 2024, and possibly some parts of 2025.
I love how it's like, forget Palantir, I'm going China. Because before you used to love Palantir and hate China, it's like it's a 360 or 180. But it is what it is.
No. I think, well, first of all, look, let's not turn China into like the evil enemy. Okay, like the geopolitics is one of those stupid things where there's got to be good guys and bad guys, and there's no such thing, in my opinion, as good guys and bad guys. I mean, well, technically there are good guys and bad guys, but it's the clash of ideologies. Now, the Chinese are more capitalist than we are right now. Look at us right now. We just had a union, right, come out and say we're going to stop all things, and now we're paying them more, right? We're paying them more. We're giving them more benefits, and the Chinese are all about automation, and their ports are all getting automated. So, which one is the real communist country and socialist country? The country that's getting blackmailed by its workers into getting raises by a union boss, or the other country which is adopting innovation and technology to grow itself?
Okay,
you know?
so
which one?
So last question for you: the worker strike. Do you think it's good that it was resolved, and do you think there's going to be implications of that, or how do you think the market's going to interpret this?
I wish it had gone on for another like couple of months, actually, to be honest with you. I know that would have really screwed things over in terms of like just general instability, but at least it would have given a little bit of a pause to any other union bosses thinking that they could just kind of like let this happen. Right now, in my personal belief, I think every single union boss in the country is now looking at this as an example for how much they can get on their next the contract negotiation. And then on top of it, if they're not looking for something like this, they're going to get replaced pretty fast to someone who is more agreeable to like these massive increases in wages. The problem is if everyone starts to get wage increases that are very similar, about 5% per year, that means that now inflation on a wage environment is going to get entrenched. And then we'll never see 2% again. We'll literally have to live with like 3%, 4% inflation. And then that means that we'll have to live with high interest rates. So I think right now we need a period of normalization. And the thing is, this union thing definitely didn't help. I do have to commend the Longshoremen's Union because they were very opportunistic in realizing, number one, they've got the U.S. by the balls because of like this inflation thing. Right. So they could take advantage of that and say, look, inflation hasn't caught up. Our wages are stagnating because of that. So number one, they were able to leverage that. They were also able to leverage their importance. And basically right now, everyone is afraid of inflation. So they know that if they stop supply chains, inflation climb up in the short term, which also meant that a lot of pressure was going to be on the shippers to make a deal. So I think they got what they wanted. The question is at what cost, and what cost to the general like consumer eventually, because this has very similar feelings to like Detroit, when like all these automotive workers, like UAW people, kept asking for higher and higher and higher wages. And then what ended up happening is that kind of reverberated into the general economy. And then you had inflation becoming a lot more stickier. So the question, I think you're going to definitely see like an all out push to basically de-unionize a little bit. So the companies are definitely going to utilize more automation and everything else. But then, I don't know, just everything's just weird right now, dude. So I think China's the place to be. China's where I want to be, man. So.
All right, Kris, appreciate it as always.
By the way, I am going to short Palantir eventually. I can't now.
Wait, you're confirming right now, right here live, that you will short Palantir.
I looked at my wife yesterday, like, because I sold some of the stuff that I had. I made a good profit on it. And I'm like, okay, now I'm sitting on some cash. And my wife is looking at me and I'm looking at her and she's like, don't do it. And I said, what do you mean? She's like, I know you want to short Palantir. And I just feel it, bro. I have to.
But dude, you remember what happened last time when you shorted it at 27? It didn't work.
I know.
I
But
mean,
see, that's the thing. I'm persistent. So see, some people can get conviction on being bullish. I can get conviction on being bearish. I just have to know what kind of positioning I'm running into, kind of sentiments there. And basically my whole thing is now I'm literally waiting on a data point that shows that Palantir is slowing down. Any indication, like even if it's just one quarter that, hey, we missed on, growing at 30%, we only grew 29. It's like, motherfuckers, that's it. Short time. Let's go. So that's what I'm waiting on. I'm waiting for the data that proves that this thing, one of my indicators has already been triggered, which is insiders, including Teal, have been selling. So
yeah, but that's
that,
that's for every company in the stock market. I mean, that's like
sure, man, sure. That's what you want to think, but I don't think Peter Thiel like selling that many shares. I don't think so, bro. They know internally that hey, this is the time. I mean, dude, these are really good capital allocators. They know what's up, all right, and they're trying to front run this stuff. They're getting out. So I'm not saying that right now I want to like short it because Peter Thiel got out. But I think that that's an early indicator, in my opinion, that business is going to be slowing down. And the minute it starts to slow down, that's when I'm gonna short it. You know, but it's very similar to Celsius. Celsius, once the data justified selling it, bro, I had no qualms about selling Celsius. The only thing I didn't do was short it. You know, because like at the same time, it's a consumer packaged goods company that you know could be taken out by Pepsi or whatever. But there's no one going to be taken out Palantir at an $85 billion valuation. So my thing is right now, Palantir is definitely going to get a correction. Question is when. And my opinion is when I see the data start to show that they're slowing down, it's time. I mean, I may end up losing a little bit of profit by waiting, but I'd rather wait than try to make a prediction now and live with that. So all I'm waiting for is a slowdown. So the minute that slowdown comes, this thing's gonna
basically after Q3. If Q3 is good, you're not going to short. If Q3 is bad, you're going to short.
Yeah, Q3, Q4, Q1 of 2025. I'm patient. I have capital. I can wait until the data comes up. And once that data comes up bad, dude, everyone's gonna dump it. And Dan Ives won't be there to save their stock at that point.
All right, Kris. All right, thank you for joining the show, man. We'll talk to you later.
Later. Take care.
Later. Bye. Good old Kris. Good old Kris. Look, I mean, I think we're going to reaccelerate growth. And I think there is a world, I think Sachin had a comment in the chat where you could see the market correct and Palantir's correction could be subtle, not 50, 60%, simply because of the fact that money's coming into Palantir not as a risk on AI play, but a safe AI play. Sachin, if you're still here, he had that comment like 30 minutes ago, but it was a very good comment, which is that, hey, if the market thinks Palantir is a safe AI company to put their money versus a risky AI company because of S&P inclusion, profitability, yada, 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 then it's like, wait a second, maybe we should not sell it off. I mean, it will get sold off if we have a big correction, but does it go back to like $20? Does it goes back to 15? I don't know. I think that's a little tough to ask, especially because there's going to be so many dip buyers. Could it go back to 30, 32, 33? Yeah, but I don't think anyone here would be like, all right, we'll buy that dip, right? That would be normal. A 50, 60% correction, which is what really would benefit people who are like bearish Palantir, that, I don't know. I think if they're reaccelerating growth and we have macro tailwinds like rate cuts, that is ultimately really bullish for Palantir. And then again, coming down to the fundamental thesis, if you're new to the channel, you know, some people are probably new. They're just joining over the past year, past couple months. We've done a lot of videos on this company. There's I've talked to a lot of people who know the company, who are at the company, like trying to understand. We had some people on the channel yesterday in the market close. What is the secret sauce Palantir has that the rest of the world doesn't know about, that they're starting to figure out? Starting with Mike Siebel on Twitter yesterday, who's one of the partners at Y Combinator, who tweeted about Palantir, or Ben Thompson, one of the most elite tech journalists on the planet, who started saying, hey, we think Palantir, he put out an article a couple days ago. I still haven't had a chance to make a video on it, but it'll come out next week, where he said, hey, Palantir's ontology is the differentiator against LLMs. The world is starting to notice. And as a result, I think what we've been analyzing for the past couple of years is coming to fruition. And the world wants to get in on that story. And that's what's making people very excited. I know I showed this video a couple times yesterday, but for those that didn't see this video, this is a clip that I think is very important on a day like this to remember as we're hitting 52-week highs. This was Karp on the Q1 2024 earnings call talking about investors.
How do we have the best investors in the world, especially individual investors? Why do they stick with us when times were hard? Why do they fight for Palantir? Why do they, every time someone writes something in name, Palantir's gone MAGA, Palantir's doesn't have a product, Palantir doesn't have margins. I'm sure this quarter, Palantir's growth is decelerating despite the fact it's obviously we're obviously crushing it in America. Palantir is too crazy. Palantir will never be profitable. Palantir can't IPO. Palantir is too weird and odd to produce something that will be disruptive. We knew it was bullshit. The people who out on the front fighting against that BS, fighting against lazy, inept, discriminatory in the sense that is ignorance, people maligning Palantir do it in great part because they believe that we are fighting for them, and we are, and we're fighting for ourselves, and that's why we have such a great company. So thank you.
Not gonna lie, bro. That clip, that clip gets me a little emotional because it's just one of those things where he's saying like, why do we have investors that fought for us when no one else did? It's because they believe in us. And like at the end of the day, whether you have 15 shares, 40 shares, 1,000 shares, 20,000 shares, you contributed to the success of this company. You are an owner of this company, and your ownership in this company is what allowed the company to execute, especially for those that were buying in 2022 and 2023 when things were rough for a good 24 months. And I think Karp acknowledges that, dude. I think Karp is so damn happy that regular people like me, regular people like you guys in the chat, people that have regular jobs that take a little bit of their income and put it into Palantir that's disposable and that have been doing that for the past couple of years. I think Karp is so freaking happy that the market is rewarding those people to the point where you can sell today if you really wanted to take some profits at a better price than him and Teal did. At $5 better than Karp did and $2 better than Teal did. I mean, that's insanity, dude. That doesn't happen. That doesn't happen in the stock market where insiders, as Kris mentioned, can dump as much as they dump and there's no one holding the bag because the bag ends up becoming lighter because the price ends up going up. You can end up selling at a higher price. So I think Karp is just so happy that this is how the story is playing out. Could the stock correct from here? Obviously, I don't want to be super euphoric. I understand the valuation is stretched. I think all bulls understand the valuation is stretched, but sometimes you go with the trend, and the trend right now is to the positive side. If you looked at Palantir's charts on the technicals, it's one of the most beautiful charts in the stock market in terms of just how it's hitting higher highs and higher lows and closing above certain key levels. There's no volume shelf resistance. I mean, there's barely any in this $39, $40 range, definitely not at $39.82. So if we dump and the market opens in 3 minutes, it's because people are taking profits. If we go higher, I think it's because there's barely any resistance there from a volume shelf perspective because it's been 3 years, more than 3 years since we've seen these levels. And I think Karp is just so appreciative for the people that stayed when no one else believed. Now, I really, really think he's and that's why he mentions retail investors as many chances as he can. A lot of people think it's this gimmick he's playing. I'm like, dude, I met the guy. It's not a gimmick. Like, he was so happy he personally came up to me and said, thank you for being here. We really appreciate you. Like it's one of those things where he just knows that the rest of the world didn't understand Palantir. They didn't understand the story, and retail did. And he's really happy that the rest of the world is starting to get it because of retail investors. Right now, why is Forbes doing articles and New York Times doing articles? They weren't doing this in 2022 when the stock was $7. They don't want to cover the CEO of Palantir when the stock is $7. They want to do it when the stock's $40. All right. So in the meantime, you have to have some people believe, and that's where everyone in the chat ultimately comes in here. Super cool. Dan says, Amit, I have tremendous respect for you. Staying so bullish while having such a constructive conversation with Kris is impressive. Yeah, it's because, look, I know some of you guys in the chat don't like his opinion, but at the end of the day, he's a human being, right? Like, we treat human beings with respect. I can disagree with him, and I've disagreed with him for years about Palantir. That's okay. You know, he has a different perspective. I have a different perspective. We can have a mature conversation about that. And I think that's the most healthiest way to build a community, right? You want to allow the bears to have a perspective, even if the perspective you may think doesn't make sense, because that's what allows, the bulls to stay in check and for you to know that your bullish thesis actually makes sense. Like, when people say something that's bearish about a stock that I own and I don't think their bearish thesis has any logic behind it, that gives me more confidence about being a bull. But you need to hear that thesis. And sometimes they might have some logic behind it. But if you don't hear that thesis, because you just get emotional, it's very hard to actually invest. So that picture I just showed, Elon Musk tweeted, FSD will soon exceed 10,000 miles between critical interventions, which is a year of driving for most people. That's a very important stat leading up to 1010, because that means that FSD is starting to get some of the more critical data in regards to the mileage that it needs, not just regular driving miles, but driving miles with interventions. And so another small piece of data going into 1010, again, delivery numbers a couple of days ago weren't the best, even though I thought they were pretty good at 462,000. The market thought they weren't the best, so they took it down 5%. Tesla fell to 238 yesterday, closed at 240, now at 246. Job numbers, for those that are just joining, we added 254,000 jobs versus 140,000 jobs expected. And that's why markets are currently seeing a little bit of momentum as we get into the market open. All right, folks, here we go. It is time to see how the market opens up. All eyes on Palantir, 9:30 a.m. Friday, October 4th. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. 39.67, 39.70 on Palantir, up 1.2%. There was a little bit of a dump from 39.90. Got stopped at 39.70. Now it's fighting for that 39.70, up 1%. We go down by 40 cents. Will be red on the day, 39.56. So we're getting some sell side pressure. We'll see if that can hold up or if that has a little bit of reversal. This tends to happen with Palantir, usually a little bit dump in the beginning, and then throughout the day, we'll see if things go higher. We'll get back to that in a second. Robinhood at 23.02, IWM up 1.49%, Rocket Lab up 2.29%, Meta's at 5.86. Goodness gracious. QQQ's at 4.87, SoFi above $8, up 2.43% of the day. Amazon 1.85. Amazon, I think, was down because of the port strike, but now the port strike is resolved, so that should be a tailwind for them. S&P at 5.72, Nvidia at 1.24, ARM at 140, CrowdStrike 287, Black Sky up another 7%, FXI up 2%, Alibaba up 1.9%, AMD up 2.4%, Palantir 39.54. So Palantir still up 1%. It's not really taking a massive dump. There is a little bit of a red candle, but the red candle is not super aggressive right here. 39.60. Tesla up 3% of the day. That's really nice to see. 247 on Tesla. Again, we were at 260 like a week ago, I think last Friday. So right now here at 247, which is not too bad. And obviously getting some momentum from that jobs report as well. Unemployment also came in at 4.1%, lower than 4.2. Even if you believe the 254,000 jobs are fake, you can take off 100,000 jobs. We still get to 140, which is the number the market actually wanted. Palantir 39.66. So Palantir is still up right now. Let me check the order flow resistance on Palantir and see what we are looking at in regards to potential resistance as we go further. So volume so far is 5 million. That's actually very good volume. That is huge volume for Palantir. That means it's on track to have a big day when it comes to volume, close to 70, 80 million. Resistance at $40 is 11,000 shares. It's not a ton of resistance. If we end up pumping close to 40, maybe we'll get some more shares that pop up at that sell wall, but so far it's not crazy resistance. The bid-ask spread is pretty tight right now, which is why you're seeing this like 1 cent, 2 cent movements. But there's not a ton of resistance. There's not a ton of resistance right here. PayPal, where is PayPal? PayPal 78, that's up 1.6%. Meta 585, Amazon 185, SoFi right below $8 at $79.99, but still up on the day. Dell, again, Michael Dell sold at 122 this week. Dell is still below the price that he sold $1.2 billion with a B of Dell at. This is why I keep harping on the fact that insiders did sell Palantir, but Palantir is up $2 more than what they sold at, which is incredible. Oh, 39.78. All right, so we're getting into, hopefully, the 39.80s. There we go, 39.84. All right, you're at 39.84. If we get through 39.80s, maybe 39.90s are up. And then it's just 10 cents to that elusive number that I think a lot of people have been waiting for to see, which is $40. Did you guys remember a month ago where we were at $29.99 and it was such a big deal to get to 30? Like, it was a big deal, dude. We were on stream for like 4 hours trying to see if we can get to 30. I mean, maybe we see, and it was also on a Friday. Today's a Friday as well. Maybe we see some shot to 40 if it's possible. Thompson, this is like playing bingo. What was the data for jobs? Data was 254,000 versus 140,000. That was the job numbers that got the market a bit excited. Robinhood right here at 22.91. IWM up 1.39%. The Q's up 1%. SoFi again is up. Let's check crypto stocks. Crypto stocks are green because Bitcoin's up 1%. CleanSpark's up 5%, or not 5%, 4%. Coinbase is up 3%. Bitfarm's up 3%. BitX up 1.7%. Marathon's up a bit. Iran's up a bit. I think I think Bitcoin is bottomed. I think Bitcoin, I think it bounced off 59,000 like 6 times yesterday. I think Bitcoin is bottomed. I really do. I think for us to fall, but we would have to have some dramatic headline in the Middle East, or just like 0 rate cuts, which could be a headwind for Bitcoin. But I still think we get 50 bips by the end of the year, even with this jobs number. For Bitcoin to kind of oscillate between 55 and 60 for the rest of the year. I really do think we've bottomed here, and I think the market's reflecting that in a lot of the Bitcoin stocks as well. So I mean, look, I think by the end of the year, we're closing in on 80, 90. I know it'll take a lot to get there. The one hesitation I have is the liquidity opening up for people to take a risk? And the answer is yes. Global liquidity, based on what China's doing, is opening up at a massive level. However, it's not fully flowing into Bitcoin yet. Robinhood right there, 23.10. There you go. Up 3% right now. But if it does, then I think that becomes more exciting. Also, the election. I mean, that's a big thing. We got to get out of the way, right? So once that's done, we'll see what happens as well. Yeah, pretty much every share someone has bought of Palantir over the past 3 years is now green. Outside of if you bought it like 45 or 42 or whatever, which like maybe some people, I'm sure some people bought it there. But for the majority of investors in this company, if you've bought shares over the past 4 years that it's been public, you are green on those shares. I remember buying shares at my first share was like $27 back in March of 2021. And then I was buying it like 28. It was, and then I think I bought a bunch October 2021, right before my birthday. I was turning 24. I bought like $3,500 worth of it. I remember this because I just got paid and I just dumped $3,500 at $25. And I was like, well, it's $25. Who cares? I don't know what the market get 25. It's not. And then I was like, oh, damn. It's at 19. I need to buy another 3,000. And I took the next 3,500 and I bought it at 19. I was like, it's down from 25 to 19. I thought this whole thing, dollar cost average, was supposed to average down. And then I'm like, oh, it keeps falling. And then it went to 6. I'm like, oh, okay, so now I got to buy it at 6. So it's just been a hell of a journey. And any shares you've bought are now officially green. But Robin at 23.15, up 3.2%. Not bad here. This one's getting some love. Again, the news on Robinhood today was that they are launching margin in the UK. I actually bought some shares of Robinhood in the morning, dude. I literally woke up, checked my phone. Let me tell you guys exactly how many I bought. What time did I buy these? I think I bought 50 shares in the morning or 25 shares. Yeah, I bought 5 shares at 22.62 at 7:47 a.m. and then I bought 30 shares. 25 shares at 22.62 at 7:47 a.m. Why did I buy those 30 shares? Because I thought the jobs number would be good. And so when I woke up and I saw the pre-markets, I was like, okay, still mid 22s. I'm buying. Now the jobs number was really good. And so that's why we're seeing momentum. The question is, will it affect inflation estimates? And I still think inflation will be okay. Where's Palantir? 39.52. All right. So we're getting rejected right here in the red. 39.52. Tesla says she's bought Hood yesterday at 22.10. Yeah. Again, 22.50 below. I like it there. 39.56. All right, so still trying to get back into that 39.70, 39.80 range. Look at Meta, dude. Oh, by the way, do you guys know who's the second richest person on the planet? Mark frickin' Zuckerberg, because Meta is now closing in on $600 a share. Elon is still number one, and if Tesla falls 10% and Meta goes up 10%, Zucks will be the richest person on planet Earth. I think, I know a lot of people don't like Elon, but I think people are gonna like literally gag at the fact that Zucks. I like Zucks, by the way. I'm not a super anti-Zucks, but I know a lot of the world is. I don't think they're going to like seeing him as number one. But he's still going to be number one because, if the stock goes up, then he will get his net worth going higher. So Zucks right here at 587. Let's look at the Mag 7. Is Meta outperforming the Mag 7 today? Microsoft's up 0.5%. Apple's up 1/3. Amazon's up 3%. There you go. I like that. I think the Amazon dip yesterday was just port strikes and Amazon's coming back. Nvidia's up 1.2. Tesla's up 3.3. So Tesla's leading the Mag 7 today. Tesla getting some love again. I guess the market's realizing that deliveries is not that big of a deal right now. And then Meta right here trying to close in at $590 a share right now. Hood 23.20. Yeah. Dude, I woke up this morning. I saw it at 22.60, and I just had a feeling the jobs report would be good. So whatever cash I had, I said, you know what? I'm just buying whatever I can buy. Look, Hood can still go down if Bitcoin takes a hit or anything. But again, so what has been my thesis on Hood for the past couple months? The market needs to confirm we're in a bull market, and then Robinhood will react. Why? Because Robinhood is a bull call on the market. That's what it is in its current state. With this jobs number, again, it's just hard for me to see where the recession is. And so if the market is pricing in a decent chance of no recession, that's where Robinhood is going to get a lot more momentum. 39.55 on Palantir, up 0.78%. Did we get any price target upgrades on Palantir? Oh, we did get. No, we didn't get that. That wasn't on Palantir. Let me see. No, like headlines on Palantir. I'm not seeing any price targets. I showed you guys the Bloomberg terminal yesterday. Institutional ownership now is at 44%. That was updated as of September 29th. Still kind of low in my opinion. But one thing that could be explaining the institutional run-up of the shares, which I think all of us think that people buying it at 39.54 is not just retail, it's probably institutions, is that some of the institutions that have been holding Palantir, like Renaissance Technologies, for example, for the past couple of years, maybe they're increasing their position. So like, even though the institutional ownership itself, like through the numbers of institutions, is not going up because that's actually down 1.68%, the actual institutions are buying more shares. The geographic locations of the number of the places that own Palantir the most: the US, the UK, Japan, Switzerland, Norway, Luxembourg, Canada, and Hong Kong. Those are the top places that own Palantir. SoFi is above $8. Am I green on my SoFi options that I bought last week? Let's see. I'm still down $1 on those. So again, my play going into SoFi is $15, $20 call debit spreads for January 2026. I paid 35 cents for them. Right now they're trading at 34 cents. So that means $35. If SoFi goes to 20, that is a 14x return by Jan 2026. I have to wait till expiration because it's a spread. And so you need the short side of the spread to collect theta decay. But I would be very happy if 3,500 turns into $47,000 of profit if SoFi breaks out to 20. If SoFi even breaks out to 12 or 15, I still think that's a decent return, even if it's not a 14x. But that's my play on SoFi. That's my exposure to SoFi. I really like it because it's asymmetric risk. If SoFi does break out, like all the bulls are telling me that it's going to, like it's going to break out of the trend, short covering, yada yada, which I think are reasonable arguments, then my turn 3,000 into 50 is not a bad asymmetric risk. And if SoFi stays flat over the next year at $8, I lose $3,000, which I'm okay with. That's all right. But that's how I'm positioning myself for SoFi, and now it's just up for guidance and Noto in Q3 to show what they can do in the future. Nvidia right here at 124, S&P at 572, CrowdStrike at 286, Black Sky up 5%. Palantir still struggling in this 39.55 range. I say struggling even though it's still up 1% on the day. I know we're all greedy and we want 40, but 39.58 is up 1% on the day. It's up 0.9%. So it is still having an incredible day. 12 minutes into the open, 7.7 million shares. There are simply more buyers than sellers, and they're willing to buy in the high 39s, which is incredible. Absolutely incredible. Can you invest in IPOs without being accredited on SoFi, or am I misremembering? I'm pretty sure you can invest in IPOs without being accredited. The whole point of them bringing IPOs to the platform is for you to be able to invest. Also, you don't need to be accredited to invest in an IPO. To be in a private deal, you need to be accredited. So if the company's going public and you're just like, they give you early access, you don't need to be accredited for that. UDC, thank you for the $7 Canadian super chat. Amit, thanks for all you do. You are now part of my routine while I work. We'll miss your market close. Enjoy your trip. Thank you, UDC. I appreciate it. For those that didn't know, I'll be going to India tomorrow. We will not be doing the market close for the next 2 weeks because it'll be 3 a.m. my time, but we will be doing the market open except for like 2 days. So we will keep things going. It'll just be in India, and that'll be fun. It'll be a new background, new environment. I'll probably have some guests. My uncle, who's a big guy in the stock market, like he's been investing for 20 years. He'll probably make an appearance. He actually watches these streams. He loves the stock market. He talks about it all the time. So it'll be fun. We'll have some cool content. And we've got 1010. We've got the Robinhood event. We have so many things to cover in the month of October still. So definitely a bunch of things to take a look at. Apple at 226. Snapchat's up 1.2%. Google at 169. Palantir still at 39.50. Let's go through some headlines. Let's see if we have any headlines for the day. Robinhood right here, 23.29. Palantir 39.57 on the day. MicroStrategy is at 170. Okay, so that's helping Bitcoin. Yeah, Bitcoin. There we go, up 5%. Where's Bitcoin? Bitcoin trying to break 62. Maybe we get 62. JP Morgan upgrades Abercrombie & Fitch to 195. This stock took a beating after the last earnings. They're up 5% today. Yeah, they had a really good earnings, though, so it wasn't anything that's too bad, but they took a little bit of a beating off missing some estimates, but they were probably priced for perfection. They were up 77% for the year. You guys know how we haven't talked about the consumer in a while? Like we haven't talked about the consumer in I would say like a week, dude. Like we haven't really focused on the consumer, and maybe that's because the narrative is shifting from a weak consumer. Now, Q3 guidance, or Q3 earnings, if Q4 guidance, if Shopify comes out and says, hey, don't expect a big Q4, then we have some consumer issues. But theoretically, that shouldn't happen because it's the holiday season. And so going into the holiday season, we usually get guidance that's decent. And if we have bad guidance in the holiday season, that means something's really bad in the economy. But again, this is why I love the macro. It's really hard for Shopify to be like, hey, people are not going to be buying stuff during Black Friday, Thanksgiving, Christmas, etc. If the jobs report added 250,000 jobs. This is the beautiful thing about understanding the macroeconomy and trying to put these pieces to the puzzle together. It's very hard for Shopify or e-commerce companies or consumer companies to have a horrible Q4 guidance, even if it's a little bit lower than maybe expectations are going into the holidays. If people have jobs, they can spend. Palantir 39.66, 39.67, IWM up 1.5%. And so we'll see how the guidance ends up for Q3, for Q4, but maybe not the worst thing in the world. When are you coming to India? October 5th to October 21st. I'll be back. I'll be back pretty quick. It'll be 2 weeks and then we'll be back. What else do we have? Take your uncle for an Indian steak dinner. I don't think they have steak in India because like cows are very important in India. So I don't think there's any place in India where you're gonna, dude, cows literally walk on the street in India, bro. I remember when I went there in 2004 for the first time and we were driving and we had to like we had to like literally wait for like 50 cows to pass a highway, bro, a literal highway. I was like, oh, that's how they do stuff over here. So yeah, we're probably not going to be eating steak in India. As Sachin says, cows are sacred in India. Sachin, thank you for the well wishes. He says, have fun in India. Thank you, Sachin. I'll be in New Delhi in India. It's pretty wild, dude. I remember I saw a cow use the bathroom in the middle of the street in India, and I was like, oh, so like that's, you know, dude, there is poverty. There's 1.4 billion people. It's not that big of a place. You got a lot of animals. Like it's just how that country is. But I haven't been there in 5 years, so maybe that's not happening anymore. Maybe it's a bit more modernized, but we'll see. But I literally can't believe I'm going in 24 hours, dude. Like usually it hasn't hit me yet that I'm going back to India, but dude, the amount of memories I have in India, like it's a very special place in my heart, dude. My sister hates it because my sister, she just loves being comfortable in her environment. I love it, dude. I love walking around the streets. I love going to the grocery stores. I just love the restaurants. I love the people. I love the family that's there, obviously. And so it'll be cool to check it back out again after 5 years. PayPal 78.56, SoFi 807, Robinhood 23.37. Maybe we hit 23.40. So really, last Friday we hit 23.80 on Robinhood. Made a round trip all the way to 22. Came right back. So it gave a decent dip opportunity over the past week, and now we're back here at 23.40. Enovix is up 2.72% of the day. So Enovix, you're getting some momentum. And then the broader S&P is up 5.72 right now. Not too bad. Amit, do you speak Indian? Yes, but I sound like an American when I speak it, and everyone knows in India, so they try to overcharge me. But it's okay because I'm okay with paying more to people that, you know, don't make a lot of money. So I'm like, dude, I know you're overcharging me, but I'm going to give you even more than you're overcharging me because that's okay. Krupa Patel, thank you for the $10 super chat. Thank you, Amit. Enjoy your trip. Your streams are amazing and creating a sense of community. I needed this because I can't talk about stocks with most people in my real life. Well, thank you for joining the streams, Krupa. Thank everyone for, dude, like this stream to me, this community to me is everything because I don't have that many people either outside of like, you know, the people I've met through this community to talk about stocks with. You know, my friends don't care. My sister has made so much off put premium this year. Like, and I show her what I'm doing in her account. SoFi right here, 807. And I'm like, dude, it was funny. So my sister, her laptop yesterday, her MacBook, the internal screen cracked, right? And you guys who have a MacBook, you know, that's like horrible. You have to pay $800 and fix it and all that stuff. It happened in the summer as well, right? Like, so this is her second time it happened. So she's like really upset about this. I don't know how she did this 2 times, but in the summer when it happened, she was getting to learning into how to sell puts and stuff. And it cost $700. And I was like, all right, transfer 4,000 into your brokerage and I'm going to sell some puts and we're going to get that $700. And I did it in front of her. I sold her some long dated puts, and off that 4,000, I think we made like $800. And she's like, I just made $800. I was like, not really. You have to wait till the contract expires, and then, you know, you have to see how the stock performs. But given the position of this, I think, you know, yes, you basically made $800. So I basically, you know, I showed her how you can make money in the markets and pay for this annoying thing that happened, like your MacBook screen collapsing. SoFi 811 right now. Palantir 39.75, getting back to some momentum. And it was a real game changer for her, right? And then I try to sit down with her and like actually explain what I did and like really walk through it. And she's like, that sounds kind of boring. And I'm like, dude, you just paid for your MacBook based on getting a what is it, like a 30% return on $4,000 over the course of like 6-7 months, which is not a horrible return. And you don't care? Like, you don't care about learning how I did it? And she's like, dude, it's so boring. Like, I'm like, leave me alone. And I was just like, wow. So like really a lot of people just don't care. They just don't care. Maybe it's my sister, but I think my sister's like a lot of people. So having this community is very special because it's important to be around people that actually really, really do care about that stuff. Okay, 39.86. Are we getting into the 40s? Are we getting into the 40s? Where are we at? 39.86. 39.84 right now. So resistance is not strong. Now at 40, we have 23,000 shares. Now at 40, we have 23,000 shares. So someone needs to buy basically $800,000 of stock, $920,000 of stock at $40. Someone needs to spend $1 million and tear down that wall and get it done. Ultimate Cow says, my wife doesn't talk stocks with me, and my other Palantir buddy bought in the 30s in 2021 and sold all of his shares below 10. Yeah, dude, it happens. It happens. Sometimes people just don't care. They just do not care. And again, to my sister's credit, she has a real job and stuff, and right, she's like, she has other things in her life that she cares about. But like, still, I was like, she's just not interested in learning about this stuff, right? Because she just doesn't. Not even she doesn't see the value. She's just like not. That's not where her brain is oriented. And I think that's partly due to your curiosity at the end of the day, right? Some people are much more curious about money. Some people think of it as a game. Some people see it as cool. Other people just like, they don't know what's in their checking account, right? They're forget financially literate. They just don't have an understanding of money that like is part of their vocabulary or part of their daily life. And I think that's just very important to have. And you don't have to be obsessed with it, but you definitely have to have part of it if you're trying to achieve any level of financial freedom and find opportunities to have assets compound at the end of the day. 39.84. Look, momentum is on our side, folks. Volume is 10 million shares, $89 billion market cap. We're 15 cents away. If there was any day where we would bust through 40, given the jobs report we got this morning, I feel like it would be today. Now, we do have to survive the 1030 slam, which is an algorithmic attempt by the market to get everybody to sell their shares. And we have about 40 minutes till that happens, but maybe still we can get through these levels. Can you recommend any call put videos for beginners? Yeah, I have a video with TJ on, by the way, TJ should be joining probably in like 20 minutes. I have a video with you. I'm gonna link it in the chat right now. We did a video on the basics of calls and puts in January. So let me copy this link. Here it is. It's in the chat. You can check that out. You can watch that whole playlist, and that'll give you the basics on that one. The 1030 slam is an algorithmic attempt by the Illuminati to get everyone to sell their shares, and it has happened for the past 2 months. That is the 1030 slam. Is it scientifically proven? No. Is it actually proven in the stock market? Not really. But at 1030, the market crashes. When I mean crashes, I mean like you see a bit of a dip every day, really, for the past 2 months. SoFi holding $8 right here, up 2.8%. So it's one of those things that we have to get through. And maybe today we burst through it and see what happens. Swing trade a put to prove your thesis. All right, I'm not doing that. I'm not. Who's buying puts on Palantir? Is anyone buying some protection or selling covered calls? Dude, thank goodness I didn't sell. I was about to sell. 39.90. I was about to sell covered calls 2 days ago when we were at 37.50, and I was like, you know what? I'm not doing it. I was so close to doing it, dude. I was so close, and I was like, you know what? I'm not doing it. I'm not doing it. Not in this market. Not in this market, especially because they weren't conservative. It was like 45, which you could argue is conservative, but 45, bro. By January, I mean, like, I don't want to say it's going to happen, but I'm saying there's a shot, right? TJ, what's up, TJ? We're trying to see if Palantir gets to 40. I'm sending you the link right now. You can join in about 15, 20 minutes, and then we'll do our segment in a little bit. We are just trying to see what happens to Palantir. So TJ just sent you the link right now. All right, 39.90. Let's see what happens and what we get. Selling covered calls and almost to the point of regret, but not yet, still raking in cash. Yeah, I mean, here's my thing about covered calls as well. And I say this because I know Bay Ray has a pretty nice average on Palantir. If your margin of safety is really low, like under $10 or whatever, which I think Bay Ray's like at $10.50 or whatever, then the like losing the shares would suck. Like it would just suck so bad, right? If your average is like 27 or 28, you could deal with losing the share. Like, all right, you know, it really sucks, but whatever. If your average is like an average that's never happening again, I think, which is $10, you're one of the few that have, you know, that cost basis, which doesn't mean you need to have that cost basis forever, because I believe share ownership over cost basis matters. Like 100%. I don't think cost basis really matters. However, when you average up, you know, your averaging up is going to be subsidized based on the previous shares you bought at a very low level, right? So losing those shares and risking losing those shares is the scary part. That's the only fear I have with covered calls when we're in this big of an uptrend. That's the only problem. I bought 100 contracts of SoFi, 100 of those spreads that I told you guys about. Okay, 39.90. So it's nice to see that we are close to 40. 39.92. There's 28,000 shares at 40. So we're going to need someone to really step in and just get rid of those shares at 40. Psychologically, buying at 40 is a very, very, I mean, it's going to be something the market's going to have to be like, all right, we're buying it at 40. And given how close we are, it shouldn't be that psychologically different from buying it at 39.90. Like if someone's buying it at 39.95 right now, what's 5 cents, right? Like literally, that makes no sense. But psychologically, I think there is an element of like, you know, do we really buy this at 40? Let's all convince TJ to do it. Well, TJ could probably do it. Oh man, 39.93. Chamu says losing your share shouldn't be scary for anyone. Reason is unrealized gains is just a number. You can't buy anything with that in the time you'll have to sell some stock. So I disagree with that. I think TJ has the same opinion. I disagree. If you have an average that is so good and you're in the stock for the long term, you should be scared of losing some shares. Because like I get the logic that, oh, if you're not going to sell it at 40, then what's the point of like being scared to lose the shares at 40 because all your gains are not real. They're on paper. 100% agree with that. But if you're not going to sell it until 400 one day, then why would you, like, it doesn't matter, right? If you're in this for the long term, you don't want to lose the shares at 40 that you bought at 10 just because it might go back from 40 to 20, right? It's like, because even if you buy back in at 20, you are still buying in 50% above your average. That's my thing. I think that argument breaks down if you have a margin of safety that is so low or a cost basis that is so low, which increases your margin of safety. Because even if we have a 50% correction and you have to buy back in and you're happy to buy back in, you are still buying at a higher price than you bought back before. So I do think if you have a really, really, really good cost basis, you should be a little afraid of losing those shares because you just might not get that. And that assumes we get a 50% correction where you can buy back in at 20, which, I mean, I don't know if that's going to happen, right? Otherwise, you have to buy back in at 35, which is not as great as buying it at 10 and just holding until it goes to hopefully 300 one day. But again, I think it's connected to your long-term thesis. If you really don't care about Palantir and you're in this and you're like, all right, at $40, it's stupid, overvalued, whatever. You bought it at $10. I'm happy with my $30 a share. I'm happy with my 3X and you sell it. Then I have no problem with losing the cover. But if you actually want to keep the damn shares, you do have to be a little cautious of that, right? 10 a.m. dump. All right, we're 2 minutes from 10 a.m. 39.80 got rejected at 39.90. Where's the rest of the market? Celsius is up a little bit. Rocket Lab is up. Robinhood is slightly down. Yeah, 10 a.m. dump got Robinhood. We were at 23.40. Now we're at 23.14. ARM at 138. Baba 115. AMD 167. Google at 168. I don't know, dude. I think we got to stay live and see if there's a shot at getting to 40. It might. Last time it happened, it was like 1 p.m., but it did happen. Maybe we just got to give it some time and see if it does happen. Where's Nvidia? Is Nvidia down? If we fall really badly, then it's like, all right, it might be it for today. But if we stay in this range, there's a shot. Nvidia 123. Yeah, Nvidia just got a little bit of a dump as well. Every stock at 10 a.m. they all got hit just now. Shopify going up right now. Yeah, Shopify's getting some momentum. Admit if you lose them at 45 and buying again at 30, you have more shares at a higher price with the same shares with a profit. It's not like you didn't benefit from using it. Yeah, I mean, look, that's fair. That's fair. Again, it just assumes it has to go down all the way to that strike to be able to get them back. You're at that point, you're just hoping the stock crashes, which is always a tough situation to be in, right? Because no one wants to bet against their stock. My thing is, if it's in an uptrend, that's when the juiciest premiums exist for the covered calls. But that's also when you have to actually bet against your stock, and like no one wants to do that, right? That's the hard part. When it's like swinging back and forth and it's just like stable, then betting against your stock is whatever. You don't really care, like what Palantir did for 2 years, which people made a lot of money on the covered calls at that time, but the premiums aren't as amazing. Palantir 39.75 right now, so still got a red candle, but still holding up a little bit. Rocket Lab at 947, IWM at 218. Again, the jobs report was really good this morning. 254,000 jobs. Did not expect that at all. I mean, quite literally, if you asked me what it would be, I would say most 160 if I had to guess. 240 or 250 is a very high number. Did not expect we would see that level. This 1030 crazy theory is so crazy. It happened already at 10 a.m. You know, dude, it's been happening. Look at stocks every day at 1030. Go through their charts. It tends to take a little bit of a dip. It's not just me. A bunch of people on Twitter are like, all right, 1030 slam. Here we go, 1030. It's probably not like a real thing, but it just, you know, coincidentally, which means it is a real thing because people control the world. Just kidding, maybe. But it tends to happen there at 1030. What else do we have? I'm looking at some other headlines. Let's see what else we've got going on. Rivian again down 7% because of, where's Rivian right now? 39.80 on Palantir. Rivian is down because of their forecast cut on deliveries. Rivian down 7%. Zux launched a new AI tool that can generate or edit videos based on a simple text prompt, elevating competition with rivals like OpenAI and Google. Okay, so basically you can say like dog eating a cake and it'll turn into a video of dog eating a cake. That's been around for a while in some of these AI tools, but they're not the best at it. So I guess Zux is launching his version of it. And then Spirit Airlines, where's that one? That thing is down 30%. That is down 27%. They are likely going bankrupt, Spirit Airlines. And that's what's happening. Fintech getting slaughtered by algos. Yeah, fintech's getting a little bit of a hit. Algos control the world. Exactly. It's not even people, dude. It's algos. Algos are the people. You know, the craziest thing about algos is like they're just people, right? Like they're designed by quants. There's people sitting in an office just like coding up these algorithms. One of my friends actually works at, where is he? With Jane Street, I think. I talked to him a couple months ago. We were at a wedding, and I was asking him about like how the process goes for market making and all this stuff. He was just like, dude, we're like staring in front of a computer and we're like literal pennies of pennies. Oh, 39.90 on Palantir. Pennies of pennies is where they make their profits. And it's all based on these high frequency algorithms that can, you know, find the alpha within an opportunity. All right, so we're back here, 39.96 at $40. There are currently 26,000 shares. 26,000 shares at $40. Robinhood back to 23. 10 a.m. slam lasted for like 3 minutes, and now we're going a little higher. See, here's the thing, dude. Historically, we've been through this process many times as a chat. We've seen get really close to a price level, oscillate within it for a couple hours sometimes, and then it breaks through. That's exactly what's happening right now. Is the same result going to happen where we break through? I don't know. But almost exactly what has been happening is happening. You know what's happening right now as well? I think you've got market makers here that don't want to see this sucker over 40. And so they're playing games. They're doing what they need to do. There's a lot of $40 calls that are going to get some momentum, all that stuff. And it's a Friday. It is close, though. It is very close. And so we're going to have to see if it can get that juice. We're going to have to see if we can get that juice. Why is American Airlines up? Well, that's because Spirit's going out of business. So all the airlines are consolidating. Oh, speaking of American Airlines, TJ has some American Airlines. That's good for the public portfolio. Oh, 39.98. Are we here? Are we here? Have we arrived? 39.99, 39.97. 39.99. I didn't see 40. Did you guys see? I didn't see 40. It's like right here. It's either going to happen now or it's either going to happen now or not. It's going to happen now or not. 39.99. 39.99. I didn't see 40. You guys saw 40. Some of you saw it. That means it already happened for some of you. 52-week high. Did I see it on the? No, Robinhood says 32. Oh, 40. Robinhood says 40. I don't see a 40 on Webull yet. Robinhood did say we hit 40 though. You guys saw it, but we need to like see it for like more than 2 milliseconds. Oh, if you guys already saw it, that means we should hit it, dude. That means someone bought it at 40. That means it should break through. Yeah, Webull's showing it right now. You don't see it on the screen, but Webull showing that the top of the day was 40. It was just so quick. I didn't see it. I mean, I think a lot of people didn't see it happen in front of them. Oh, fuck, dude. There's still 24,000 shares at 40. Wow. So I guess someone bought those 28,000 shares and another 24,000 popped up right there. And 39. Oh, there we go. There's 40. I saw it. I saw it with my own eyes. I saw it, ladies and gentlemen. Palantir has hit $40 a share. Wow. Wow. 40 freaking dollars. We saw it. I know it's at $39.95 right now, but on Webull it's showing $40.03. Yeah, 52-week high, $40.03. All the brokerages just updated. It's getting rejected right at 40, but there was enough buyers. That means 55,000 shares at $40 were purchased. That's a fact. That happened. That did happen. But then a bunch of people started selling right at that level that was greater than those 50,000 shares that were buying, and that's why you're seeing the price fall 12 cents right now. Whoa, $40. It happened. $40. It happened. So anyone with some $40 covered calls today, you just got to monitor this because you might be safe now that we hit it. The market makers let us hit it. The question is if they're going to let us go back to it, if there's enough buying pressure. I think there should be. I feel like there should be. Like it's not like going back to 39.50. It's like teetering within 7 cents. It's not going all the way to 39.12 or anything. It's like the strength, the amount of people that are ready to buy it at 39.94, 39.95, 39.85, like they're there. The bids are there. The question is just keeping it there. Congrats everybody. Big deal. Big deal. I know we've been very greedy over the past couple of weeks ever since S&P inclusion, but every day it's like it was another dollar every couple of days. And yep, $40.03. That is the new 52-week high for Palantir this year. This year the stock was at 16, hit 40. Year to date, Palantir is up 135%. Nvidia year to date, I think it's at 150, 149. Nvidia is slightly outperforming Palantir, but to say, if you told me at the beginning of the year Palantir would be up 140% this year and Nvidia would be up 150%, it would be tough to see that, but it has indeed happened. S&P inclusion, more profitability, re-accelerating commercial growth, AI adoption happening at a massive scale in the enterprise, LLMs becoming much more valuable for enterprises that can materialize those LLMs via AIP or the ontology. BP extension, Tampa General extension. They hosted 2 AIP cons this year. I mean, it's been a hell of a year of execution for this company. And again, it's not just about the stock. It's about, I say this every time, and this is sometimes people think it's cheesy, but it really is about the journey. It brought so many people across the world together to become friends and bond over our mutual interest over this company. And notice I say this company, not this stock. Like the stock's a big part of it, but there's people who care about Western values. There's people that care about the ontology. There's people that care about the nature of AI. There's people that care about Palantir actually making the world a better place. And you talk about the defense stuff. Like there's so many elements that gets people excited. And the stock is also a big part of it. But a lot of people put their hard-earned money into this company, put their hard-earned time analyzing this company. And it's really cool to see that get some momentum. And yeah, I don't want to underscore. I mean, again, I said this in the beginning of the show, but regular people invested in this company. The hedge funds didn't load up at $6. People with regular 9-to-5s that take a little bit of their income, just like myself at that time, to whatever I could save after my expenses, dumping it in at $7, $8, even though I was barely bringing my average down because I bought at 20. Like that process is what so many people engaged in. And that's why it's really cool to see Palantir at these levels. Congrats to everybody. Super cool. Super cool to see it. Let's celebrate with a bucket of mayo. We're not going to do that. That one we're not going to do. How many 52-week highs have we hit this year? I think it's over 20 to 25 52-week highs. I mean, it's a decent amount of them. There was pretty much 20 or 25 times I remember seeing that 52-week high. Oh, Lee, I just saw your tweet. That's so cool, dude. Let me show you guys this. Shout out to Lee. All right, for people that don't know Lee, they've been here for so long. Let me show you this tweet right here. They just tweeted about me. Crossing 40 with Amit. That's so cool. That's so cool. 39. Oh, there we go. There's 40. I saw it. I saw it with my own eyes. I saw it, ladies. That's so awesome. So for those that don't know Lee, they own like 165,000 shares of Palantir. A lot of Palantir, dude. A lot of Palantir. I'm going to put their Twitter in the chat. You guys can check out their profile. Super, super cool. Been so supportive for the past couple of years. She's been watching for like years when Palantir was in the dumps. And look at that, 165,000 shares. Average cost basis at 14. This is the other thing about Palantir, dude. There's a lot of people in this community that really believed in this stock, like really believed in this stock a long time ago, and they loaded up. They loaded the hell up. Now, she uses something called an accumulator, which is something I still don't fully understand, but it's this like mathematical way of like buying and selling and automated. It's like a bot that buys and sells automatically and all this stuff. But that has led to 165,000 shares. It's a big deal. It's a big, big, big deal. And again, she's not an institution. She's not she's not Citadel. She's a regular person that just believed that this company was special. All right, 39.50. We're getting rejected at 40, so maybe that's the end of 40 for today. We're getting a general 10 a.m. slam right now. Robinhood back to 22.69, SoFi 7.96. So jobs report was really good, but the market is taking it on the chin right now. S&P 500 at 569, up about 25 bips. Everything's taking a little bit of a dip. I mean, a little bit more than a little bit of a dip, but it is still green for the day. We'll see if we actually flip red. But Palantir right here is going to have to do some work to get back to 40, and we'll see if it gets there. But we did get to that $40 level. Is she looking for a date? Dude, if I ever went on a date with a girl who has, forget 165,000 shares, if she even has like one share of Palantir, if I ask her, I'm like, hey, so do you invest? And do you invest? And she's like, yeah, I invest. Like, oh, do you have any stocks? She's like, yeah, I have some Tesla, I have some Palantir. Like, I don't know what I was just like, oh, so Palantir. So what do they do? Really? So what do they do? Tell me about them. Dude, and imagine she starts explaining it perfectly. Well, they have this thing called the ontology, and what's so important about it is like this guy, Alex Karp, he has this weird hair, but he's like so exciting when he talks about it. I would fall in love in that moment, dude. I'd be head over heels just looking at her. Like, oh wow, interesting. Do you watch any videos about Palantir? I know a guy who talks about them. That would be crazy. That'd be awesome. All right, cool. So that's what we got in the context of Palantir. Again, 39.57, getting a little bit of momentum. Palantir Robinhood 22.77, SoFi 7.97. I think that's pretty much it in regards to a ton of momentum. Now it is 10:12. We'll see how the market reacts over the next coming hours. I'll probably be live for another hour and a half, but so far, Bitcoin at 61. We got Palantir closer to that $40 range. We touched 40. Robinhood hit 23.40, now at 22.80. And now we just got to see how the market interprets it for the rest of the day. It also is a Friday, so we'll see what happens as we get through the rest of the day. 569 on the S&P 500. Okay, cool. Let's bring on TJ. This is now the segment of the Friday market open that we do every single week, and we've been doing it for like 6 months now. Where we have a public portfolio. We're going to go through what the update is on that portfolio, some moves we made on the portfolio for the past week, and some moves we might be able to make today based on what's going on in the portfolio. The man, the myth, the legend, TJ the Wheel Deal.
What's up, a bit?
What's up, man? How are you?
Good. Everybody jizzed all over your screen when Palantir across the 40 or what?
I mean, look, you got 23,000 shares. You might be doing a little bit of jizzing,
It's exciting, man. It's just a psychological level. It's just a psychological level. It's exciting to know that, yes, they were there for a very short time, 2 or 3 years ago, however long it was now. But they're here again. But I think that this time's a little bit different because it's a lot more justifiable this time around.
Yeah.
Versus, when was it? In 21? When did the craziness happen? Was it 21 when Palantir went like 45 for that intraday? That was a lot of hype, and that was hype. That was a lot of, product of the market that we were in. But now it's like, yeah, Palantir's valuation is frothy. I'm the first one on that bandwagon. But at the same time, you can see a world where they're growing into that valuation every time they get a contract. You know what I mean?
Yeah.
So it's pretty exciting, man. So anyway, congrats to all the longs and strongs and all the wrongs on the covered calls. Just keep rolling and rolling and rolling like a fireman. And, 3 to 5 years, you might be able to catch up to this thing. But you got to know what it is that you signed up for when you sell covered calls into this type of strength. That's just the reality of the beast, man. And
yep.
I don't mind the situation that I'm in. These are what I call positive problems. I'd rather this emit than have Palantir in the toilet. And we're selling covered calls just to justify being in the stock because it doesn't pay a dividend, right?
Yeah.
So,
I agree.
You can't have it both ways, so to speak. You got to know what it is that you signed up for, and I think we're good, man. Anyway, you want to get started?
Yeah, let's get started. Let's take a look at the scoreboard.
Let me hit present here. Let me find Project X. Here it is right here. Whew. All right, we're ready anytime you are, brother. So net premiums collected is 304,000. Total open collateral is 1.120. Open P&Ls on the shares owned is 65,000. So premiums plus the gains or the loss on the shares is 369,143 to the good. And this has been going on since January or March or
March. Yeah.
Not bad. And then here's more of a breakdown on how it happened. So Hoods contributed, Shopify, TSL is the big contributor. There's 10,000 shares owned now on TSLL. There's 7,500 shares owned on Hood. We'll talk about that one in a second because that one used to be at 5,000.
Yeah.
Then there's 500 shares owned of NVIDIA. There's now 7,500 shares owned on BITX. You did not know that. There's 5,000 shares owned of American Airlines with the massive cash secured put tied to it as well. And then there's the 300 shares of CrowdStrike that are totally underwater via covered calls because that's what I do best, baby. I got my scuba gear ready to go rescue covered calls that are underwater. It's what I do for a living.
I know that's quite literally what you do for a living. I've seen you I've seen you navigate the end phase situation. I mean, you are a pro at doing that.
So anyway, let's talk about this bad boy. First order of business here is what do we do every Friday? We buy 500 shares of Palantir.
Oh, TJ, you're gonna do it. You're gonna do it here. You don't care. 39.60.
I don't give a shit where the price is because I'm a long-term investor, and I think 10 years from now, my future self will thank me.
Well, while you're doing this, as you bought 500 shares, I'm getting a picture on Twitter. Apparently, guys, there was a order for 380,000 shares at $40, which is a $15 million order.
That's crazy.
So someone bought 15 million of Palantir at $40.
That's crazy, yo.
That is insane.
Yeah, there's a lot of big money out there. I think the one thing that maybe retail investors fail to understand sometimes, and definitely I fall into this category as I'm updating the spreadsheet as I'm talking to you, is it's new to a lot of people still.
Oh yeah, 100%.
Like Palantir is new to a lot of people. It's a lot of y'all have been in like me. Like I invested first day that they went public via the DPO, and I've been invested with the exception of about 6 months because when it ran up all crazy, I sold in the 30s because my buddy Alan Shin said, "Hey, get out of this thing. It's ridiculous. The market's crazy. At some point, it's going to drop." And then I started scaling back in when it was sub 20 and been trying to manufacture the win ever since. You know what I mean?
Yeah.
But it's new to a lot of institutional investors still. I mean, this was a very retail driven stock for most of its life on Wall Street. So they like things that are tried and true and proven. That's what big money likes. They want the story not just to be told, they want the story to unfold. And then they'll get it. So Everything Money uses a really, really good analogy about a very promising superstar baseball player or football player in high school. Well, and before the NIL, they couldn't make any money until they went pro. Now you can make a lot of money, with this. And I don't know if you're familiar with this kind of stuff, or maybe because it has nothing to do with Well, it's kind of like Wall Streety for sports now. But these guys can make a shitload of money. Like Arch Manning makes more money than a rookie quarterback at the pro level because of his name and the university that he's playing for, right?
Right.
Well, before that, you wouldn't just give that kind of crazy money to an unproven commodity, if you will. So that's the way that institutional investors like to look at it a lot. Is retail investors are suckers like me. We're suckers for a good story, like a lot of you guys are in the chat. But institutional investors want the story not just to be told, but they want the story to unfold. And then they'll get in. They're like, oh, it's such a great deal right now. Well, why don't we make sure that the numbers kind of substantiate the story? And who gives a shit if we missed the first leg up or the second leg up? If you really think this is a generational type of investment, it's better to get in at the mezzanine level than at the basement level in their mind. And we're going to ride this thing up to the top. Right. That's their philosophy. So this level here, in the larger scheme of things, if we're looking at it the way that you would see seats in an auditorium, I would say that Palantir is at the mezzanine level right now of what it's going to be 10 years from now. So that's a good level for a lot of institutional investors to get in. And that's why sometimes these things can just keep running and running and running. And it doesn't make any sense to us because we've been in from day one.
Yeah, no, I agree. It's all price discovery, and it's the ability for people that have now discovered the story to continue to just simply go higher. Right now, Chris Camillo, if you guys saw that podcast, he's looking pretty smart right now. He said, "Screw the valuation, we're going higher, baby." All right, so can we start off with Hood because we've got some stuff to navigate on this one.
Yeah, so I posted the trade on my X yesterday, a little shameless plug on my X, but I essentially said, hey, is this trade bullish or bullshit? And I didn't get a lot of response on it, but for the most part, it's coming in as bullish. So let me say it in a nutshell. And keep in mind, I have zero emotion to this stock because I think your boy Vlad lied live on television about the whole Citadel thing. I think that he was pressed up against the corner and he had to do what was best for his company. It wasn't the best thing for retail investors, but at the end of the day, he's not going to bite the hand that feeds him. So I don't have any emotion to this. This is just a trade for me that is turning into a bit of an investment. As I study the company a little bit more, I listen to people like you. I even listened to Chris Hager on the Wheelers Marathon the other day. And he makes some very compelling arguments for Hood as well, even though he doesn't understand the 3% thing, right? So
let me set up some of the things that happened. So we had 5,000 shares. We bought 2,500 2 days ago because for those that saw, TJ and I were on a podcast for 6 hours till 3 a.m. in the night. So if anyone caught that, you caught that. And we bought 2,500 shares overnight. The problem is we sold covered calls on all 7,500 shares at $24 on 10/18, which is right after their event, versus on 2,500 shares. So the question we have to figure out now is, do we want to keep 75 covered calls at a 24 strike on Hood the day after their event? And do we want to roll that and navigate that or not? Because again, we were only supposed to do it on 25, but we ended up doing it on 75. So how do we think we navigate that position now?
Yeah, so I don't think we have to do anything right now because it's out of the money, right? Where's Palantir trading at, or where's Robinhood trading at right now?
2281.
Yeah, so I don't roll anything that's out of the money. Like, we're winning this trade, right? That's the reality. Like everything else that you just said, it's a bet on what may happen. I play in a game called reality. And what is real to me is that we have an average cost of $20.66, and this thing is going down right now, and it's at $22.80. So we're going to collect this beautiful thing right here called theta decay on this covered call.
So I disagree. I think we should get rid of 50 covered calls because I think I think that if it's just a trade and you don't care, then we let them get sold at 24 and we deal with this whole rolling stuff.
Yeah, but again, these aren't the tablets coming down to Moses, and this isn't the 10 Commandments, dude. A covered call is a very fluid contract. Like let's go to where it's just you and I. You know how Anthony Noto needs to stop this fucking shit about SoFi and the banking and the metrics and lamenting over and over about our fucking FICO scores. You're always going to get a banking valuation, and that's all you talk about. Like Galileo has to come correct with some CAGR in order to get a hybrid multiple. That's why we're all pissed off at Anthony Noto. There's some people that are calling for his head, etc., because he bears a lot of the responsibility there, because that's the fucking narrative that he's been pumping out from day one. But one day he said we're the AWS and fintech, but nobody really knows what the fuck that even means, right? So I want to stop this narrative. Just because the fucking cover call says we're going to sell it at 24 doesn't mean we're going to fucking do it. It's a
no, I agree today. I agree. I've heard this thesis you've had many times, but I disagree on doing it on something that's in an uptrend that has catalysts. I philosophically disagree. If the shares get sold at 24,
I totally hear you, but the thing is, Palantir doesn't pay a dividend. Palantir is not, or I'm sorry, Robinhood is not a $4.
No, that's fine, but that doesn't matter. If the stock's going to be higher than 24, maybe it's not. But if you have good enough of a reason to think there's a chance, I think limiting the upside there for pennies, when we have 7,000 shares, we could be making many tens of thousands of dollars. That doesn't make sense to me personally.
I don't know what I did on my computer here. Hold on one second. Oh, there we go. Sorry about that.
But I get your point, though. I get your point.
This is a good. You're making really, really good coaching points, but I think that people don't understand what the total function is of a covered call. So, what is the function of a covered call? You're a fucking master debater. What's the function of a covered call in your mind?
It's a hedge against the downside. Essentially,
that's the first function. The second function is it does cap your upside gains, right? That actual contract, those things are absolutely unequivocally. How do you say that?
You're right. Unequivocally, yeah.
I'm fucking trying. It's undoubtedly true. It's true. But we know that we specialize on rolling contracts. And even if Robinhood goes to like $30, I am absolutely comfortable playing this stock from behind for the next 3 to 5 years and catching it, because I don't, even though it's just a trade, it's not a trade that I want to exit right here, right now. So it doesn't pain me as much as you guys would think to have a covered call at 24, roll it at 25, roll it at 26, and Palantir could be at 35 for all I fucking care.
No, I agree. I
tying up a lot of money on a stock that could easily go down just as quickly as it could go up.
But that's the disagreement there. If you have good enough reasoning to think it's not easily going to go down for whatever reason, that's where I think the hedge to the downside doesn't make too much sense. I agree with you. Rolling it, and you know how to roll really well, is good. I personally don't want to be stuck rolling something for 3 to 5 years if I really want the shares. That's especially if it's in an uptrend. That's my only disagreement.
Yeah, dude.
But I'm, and also for the people in the chat saying I'm emotionally attached to this, that is incorrect. I understand this company very well. I understand the catalyst. I don't care. It's like, at the end of the day, it's not even my money. It's TJ's money, right? If we sell it at 24, that's great. He made a great profit from $20. But if it goes to 30 and we could be making another $6 a share because there's catalysts that are kind of obvious to see how it's playing out.
So how much money is that? Let's do the math. Because it comes down to the RR, right? Like we don't talk. I mean, I just don't like to do Wheeler 301 with you guys because I feel like I'm going to lose you guys. But there's this thing that their metric that I always look at. It's the risk to reward, right? So what is that?
I'll do it right now. I'm doing it right now. If we sell it at 24, you'll make 25 grand profit. If you sell it at 30, you would make 70 grand. Yeah, it's a 50 grand delta.
Yeah, so that's a big difference, right? So it's like in poker, you have this thing called pot odds. Pot odds, can you just do it to where we're talking? We're going to educate some people tonight. Fuckers, y'all wanted to go here? We're going to go here. So what are pot odds in poker? Can y'all geniuses without Googling tell me what you think pot odds are? Because you're fucking wrong, but I just want you to, I want to hear what you think pot odds are. What do they mean in poker? Because it's the same shit in the stock market. Risk reward is what you think it means and what it actually means are two totally different things. So let me see if anybody is a poker aficionado here, because it's the exact same shit.
Actually, I have no idea what pot odds are.
Okay. So there's a lot of people that say, I got a call because I'm getting pot odds. You've never heard that in poker? You need to get out more. Watch ESPN, bro. You'll learn a lot about investing in poker. You'll learn a lot because of poker. So whenever, let's say there's $100 in the pot, and you only have to bet $10 to see how it all plays out, you're getting 10 to 1 on your money, right? You invest 10 with the chance to win $100. That's pot odds of 10. You following me so far?
Yeah.
Yeah. So it's 1,000.
10 to 1. 10 to 1.
100. You're getting 10 to 1 on your money. Those are pot odds, right?
Right.
But what pot odds really mean, that's a component of pot odds. But what pot odds really mean is, what are your pot odds divided by your percentage to actually make the hand? Because if you only have a 500 to 1 of actually making the winning hand, then you're just essentially lighting $10 on fire, even though you're getting 10 to 1 on your money to make that call. So mathematically, even though it makes sense because you're getting 10 to 1 on your money, but if you don't actually have the chance of producing the winning result, then you just literally lit another $10 on fire. So it doesn't matter what your odds are if you're not going to win that bet, right?
Yeah.
Okay, so going back to investing, I have to look at how much did those shares cost. So let's go back to
$20.66
times how many shares?
7,500. So
what is that?
That is about 155.
So there's $155,000 that's not going to collect any money because we have this theory, right? And the theory is that these shares are going to go up in value, and then I'm going to sell covered calls at a higher level that is going to yield me more premiums than I would get right now, because if the share price is higher, it stands to reason that the covered call premium is going to be higher. A. B, you're also already locking in more intrinsic value, because if I own the shares at $20.66 and I start selling covered calls when Palantir is at $25 a share versus at $22 a share, the way that we did it the other day, or $22.50, whatever it was, right on the overnight session.
Yeah.
The difference is I already have an extra $2.50 of baked in money, right? Times 7,500 shares. It's a lot of money. It's probably like 20 grand, give or take.
Right. Yep.
So that's the argument for not doing it. And that argument holds a lot of water. And it's a very, very valid argument, dude. Because right now I have a lot of open shares on SoFi, and I'm not willing to sell covered calls on SoFi until SoFi has at least a 9 handle on it. Because at 150 shares going from 8 to 9, well, hell, I'm already making, even though it's on paper only, I'm making an additional $150,000. That way, if I get in a bind on covered calls a little bit higher, well, I at least locked in a lot more money versus struggling over here. So that is what your argument is. It's like, why do you want to create this stress for peanuts, right?
Right.
The issue is because if I look at the collective situation in the portfolio, I already have a lot of dead money, and I'm not really in a situation to where I can afford to have more dead money on the books.
No, I get that. I get that. The problem is your argument is it's dead money, and if there's catalysts coming up where that money wakes up, then it's not dead money, right? But it's a question of being patient at that point. Yeah. And that's what everything you're saying makes sense, dude. I agree with covered calls. And I like it. I like doing those. It's just when something's in an uptrend and there's momentum, we could be wrong about it. Probably could go to $18 after their big event or whatever. And that's where the covered call acts as a hedge. But if we have reason to believe, because we're smart, that there is some momentum here that might make the odds of 24 or 27 versus 18 or 17 to the upside higher, that's where I'm like, all right, we just wait. Just like we did on NVIDIA before earnings, right? We just waited.
Yeah. So here's the other counter arguments, right? Again, let's go into Wheeler 301. Y'all wanted to go here. We're going to go here. Okay. So my argument is to leave. You think that no, let's look at the trade, because I mean, we're talking about trying to fix this trade because you're not happy with this trade right now. And I don't want you to be, because we're not done with this trade. Whenever I put the original tweet, what did I say? What's the argument for not doubling right here, right now? Right.
Yeah.
And what did happen? I only bought 2,500 shares, right? Yeah. Because I wanted to have this conversation with you, because whenever you guys see a position, you guys think that that's it. It's the 10 commandments and they're not going to add any more to it. I'm telling you, no, we're in a different covenant now. You don't have to do the 10 because nobody could do the 10. So God simplified it, made it easy. And he said, hey, just love each other with your heart, as yourself, and then love me with your heart, your mind, your soul. Those are the 10 now, right? It's only down to 2 because we weren't solid enough to do the 10. So I'm telling you, this position isn't done yet. I would rather buy an additional 2,500 shares right now and leave those unencumbered and let me collect the premiums, because I'll manage those. And then I've got another 2,500 shares that are free to run anyway, because we're still building the position. Like, this position isn't done. Like, we we're just getting started here, dude. It's the first inning. It's the second inning with Robinhood. It's not like where if you've been in Palantir from day one, it's more like the third inning or the fourth inning with Palantir. You follow me? This position is very new to the portfolio. Or if you're so damn bullish on Hood, I'm sorry, I keep misspeaking. It's because I have Palantir in my mind.
Yeah.
No, it's because I have it over here on my phone and it's on Palantir because I'm monitoring something. Because I'm trying to roll those $12 covered calls on the phone. So anyway, the thing is, dude, we're still not done building the position. How big is the position going to get? So I'm thinking that eventually we're going to get this thing to 20,000 shares. So this is it's very early in the game.
Yeah, I mean, look, that's fine. I'm totally fine with buying more. The only point of this discussion, which I think is really good for people, is just I didn't agree with capping the gains for it so quick. But if we're getting more shares and those shares can run free, then that's fine. But that's up to you if we want to really buy that many more shares. Because I know for you, it's still a trade more than it's a long. And that's something we have to think about, right? Do you want to tie up that much money in Hood? I have that conviction. But at the end of the day, it's money that would be going long versus just as a trade for you. I'm even saying, even if it's just a trade, I feel like the covered call caps are premium.
But that's the thing. It's a trade that is turning into an investment because I keep reading and watching videos on Robinhood and stuff because I don't get into trades. I'm not Kris Patel. I don't trade the market. I'm an investor. So I sell cash secured puts and covered calls while the investment thesis is playing out to see whether or not it graduates into a longer term investment. I like to sell puts and calls on those companies because I don't want to constantly be looking for the next ticker. Like right now, dude, our adjusted cost basis on Hood, I keep wanting to say freaking Palantir, dude. It's because I was watching your damn thing. Y'all are like getting me all crazy with this Palantir narrative.
Yeah, $40, bro. $40 freaking dollars, man. Come on.
But do we have an adjusted cost basis of 14.18? You know, and the whole thing is I want to manufacture the win on this thing. So I got to sell a shitload of puts, a shitload of calls along the way because every dollar that comes in. Like, what's the ultimate game? Is right now I'd like to own those 7,500 shares with other people's money, but we don't.
Dude, I get it. I 100%. The only disagreement we're having here is this time frame. This next 2 weeks is my only disagreement. That is literally it.
Right.
Other than that, I agree with everything you're saying.
I love it. So I'm just here to challenge you because you're going to get a lot better at this thing than I ever will because you're smarter. That's just the reality. So you're in a more unique situation with more brain power.
Yeah, and again, I want to stress to everyone, I love Robinhood. I like this stock. Obviously, I've been covering it. This is not an emotional thing. I'm being logical in terms of the catalysts that are coming up with crypto, the event, the bull market, etc., S&P job report. And that's where I'm saying, all right, maybe capping the upside in the short term. If it runs to 25, if it was at 25 right now and you said, hey, let's sell covered calls at 27, I'd be like, yes. Like, of course, we have a $20 average. Why not?
Awesome. So here's, again, we got to look at these Greeks, right? Because these Greeks they control the price action of the market. So what does this Greek tell you right here, man? What's that 32 delta tell you?
There is a 68% chance that we don't hit 24.
Right. But it also tells you that this options price is 49. So if Palantir, or God dang it, if Robinhood goes up $1, that's gonna cost us 32 cents. It's gonna add 32 cents. You know what I'm saying? Like because whenever a cover call is going up or a stock is going up, that puts pressure on your covered call because you're getting closer to your strike price. Whenever the share price goes down, that's putting taking pressure away from your covered call because you're further away from your strike price.
Right.
You follow me? So for every dollar in movement in the underlying, you're either going to gain that amount of delta or you're going to lose that amount of delta. It's either going to be added to the options price or it's going to be subtracted from the options price. That's what delta is in a nutshell. And it's also a shortcut way of calculating just a percentage of assignment versus non-assignment.
Right.
But then this other thing is live and well. And what is that right there, man? What's that? It's called
theta, which is how much time decay you have.
No, but it's also how much money you're collecting for every day that we're in a contract.
Correct.
So I'm just thinking, my argument to you is all of those things are true. Everything that you're saying is 100% valid, right? If the debate was over right here, right now, I would raise my flag and say admit one. But this is where I'm going to offer you a little bit of pushback now. If we just stay in this trade for another week, we're going to collect another $18 to $20 on this thing right there. And why not consider closing the position then? And then here, right now, we're break even. I think that we could be winning like $1,500. And then we close this thing out, maybe say next Friday, because we're still a week away from the big event at that point. And then we can see what happens. And then maybe we get more information, more data, something's leaked. And then would you be more comfortable with this thing had a $25 or $26 handle? Because we have more upside and we still collected more premium along the way. So again, just because this is what the trade is now, that doesn't mean that that's what the trade is going to be. Again, these aren't the 10 commandments. There's always iterations happening in the portfolio, because it's a very fluid situation, and this is actively managed on a daily basis.
Yeah,
so
I agree.
It says 24. I think by the time the event happens, it's going to be minimum 25, more than likely 26. And I'll be sleeping like this, because I mean, it's going to be kind of hard to believe that Palantir is going to pump. What is that? If it was a 26 handle right now, how much does Palantir have to go up, or how much does it have to go up?
We're past 26 on Palantir. If you're asking what the market cap is, if it's at 26?
No. I'm saying what percentage does, because 10% would put it at about 24 and some change. So you're essentially asking Robinhood to pump about 20% to get to $26 a share.
Yeah, round about 20%. Yeah.
Yeah, because right now, what does it have to go to 24? It's less than 10%, right?
Correct, about 7%. Yeah.
So there's not a lot of protection there, so to speak. There's not a lot of room to run before we're totally in trouble. So my idea was, why not stay in this trade for another 3, 4, 5 days, collect some of that theta, and then we can close the trade out. We maybe made $1,000 on the covered call, because this thing's not causing me any stress right now. It hasn't even lost us any money, surprisingly. I thought,
and also if Bitcoin takes a little dippy dip after Middle Eastern headlines, Robinhood's probably going to take a dip as well, and the covered call will print even more. It's just, within the time period of it. So
So I guess the argument is always, do you take the hedge off to take off the ceiling, right?
Correct.
That's the argument. So maybe take 25 off. We buy 2,500 shares, and now we've got 5,000 shares that are free to run, and we got another 5,000 shares that we're monitoring. How does that sound? That's kind of like a meet in the middle type situation.
I think that's very fair.
Because I'm not an unreasonable human being.
That's exactly what I wanted to do. When we bought those 2,500 overnight, I was like, yeah, let's sell covered calls on those, but let's leave a core position to run in case, because I don't want there to be 75 squatters if they're just not doing anything. So
it's awesome. And guys, if you want to get good at life, if you want to get good at doing things like this, you always have to be willing to talk to people that are going to challenge you.
You got to be able to debate. You got to get through it. That's
I'm just saying, because it's painful, but that's where the growth occurs. It's like growing in life, dude. Whenever you have that growth spurt when you're 12, 13, 14 years old, it's very painful because your bones are real fragile. Because holy moly, you're 6 inches taller. You're 12 inches taller in a very short amount of time.
And the thing is, dude, for the people, the 1,500 people here in the chat that want to become high-level wheelers, which I'm not at that level yet. You are obviously much more at that level. These are high-level wheeler discussions.
Yeah.
Like these are like capping off the premium to take off the hedge. All this, like these are real intimate discussions around this topic. And if people want to make this a business that even generates a couple thousand more for them per month in cash flow, which I would like to do one day as well. I mean, like these are discussions you got to be able to have with other people. So makes sense.
Sorry, dude. My brother's in the hospital. I was just making sure he's okay.
Is he good? Everything all right? Or
yeah, he said his brain came out of his nose, but my brother jokes around like that. So I'm like,
that's a little scary, but he's joking.
I'm like, what? I'm like, what? Anyway, so what can we do here? How do we fix this? How do we fix it? I think the first thing that we can do is we can buy 2,500 shares, right? That was the first part of the thing. So we go here, we buy 2,500 shares.
That's what, 56 grand?
So you hit buy, call life good. So there's that. So then now we already know that those shares are free to run because we haven't sold any covered calls against those, right?
Right.
And then I'm hoping that we're still under $25. I don't know that we will be. I was one. I'm sorry, 21. I wanted to be under a $21 average, guys, just because.
I think we are pretty sure.
So we're a little over.
Above that.
So maybe about a bottom at 20, whatever, 45, whatever it was, right? 20, whatever it was earlier that
19 we bought him at, yeah.
That night it was a little bit cheaper than it is now. So we're 17 cents over budget, so to speak, right? So it's like, okay, cool. What do? You just, in the next round of cover calls, you'll get that 17 cents a share, and it's really not that big of a deal. So now we have 24 covered. We have 24 strikes, and we have 75 of those. So what you're saying here is you want to close 25 of those contracts.
Yeah. And we would be giving back basically the same premium we got, essentially.
Give or take, yeah, just accounting. So there's that. So then now let's look at the entirety of the contract or the entirety of the trade now. So how do you feel about it now? There's 10,000 shares at 21. So Robinhood is climbing up the ranks in the portfolio, right? So it's turning way more than just a trade. It's turning more like into an investment because I'm not going to be
cheating on Noto with Vlad. That's what I've wanted you to do for a while, and now you're doing it. You're having a little fling with Vlad. You still got the main check, 150,000 shares.
That's got the hair, bro. He's side piece status only. Noto's managed material.
Vlad, that boy's working. That boy's working.
Hey, Amit, you want a pro tip for life? Does anybody want a pro life tip?
It depends on the tip.
No, this is sometimes you're going to be eating things in public that might look a little phallic in nature.
Okay.
So I'm eating a banana for breakfast.
Okay.
So Amit, it's very, very important for those of you in the chat. This is one of the most important things I'll ever share with you guys. It's always the banana to the mouth, Amit. It's never the mouth to the banana.
Interesting.
That's a pro tip.
I know most people just split the banana in half when they're in public because they don't want to it's whatever. All right, there you go. That's a pro tip. So, okay, so we have 21 cents. So we got rid of 50 covered calls. So basically we have 25 covered calls now. That's it.
So how do you like it?
I like it, dude. Now we
I'm saying, how does the position speak to you now?
I think it makes sense.
The reason I was hoping we would have this discussion because earlier you were talking to somebody on the chat that was talking about Palantir or something, and you had fundamental disagreements and all this other stuff, right? Y'all were talking about something with cover calls and Palantir earlier.
Correct. Correct. Yeah.
So I was hoping this conversation would happen today because, guys, if there's something in your portfolio that you're not at ease with and you're in control to change it, why aren't you?
Yeah.
I'm just saying, I have a $12 covered call on Palantir that is an absolute pain in my ass, but I allowed it to get there, so I have nobody to blame but me. If you have a covered call that's a pain in your ass, the only person that you can blame is you. You can't blame the market. You could have taken a smaller loss. I could have taken a smaller loss a long time ago on that $12 covered call, but because of my stubborn nature and I had this need to be right versus like, hey, remember, it's a lot more fun to be rich. I lost my mantra there for a hot minute, and now I'm stuck with these covered calls that at some point are going to get called away unless I'm willing to roll them for a pretty substantial debit. But I allowed it to happen, so I have to live with those results. So I think that whenever people get angry at a cash secured put or a covered call or a trade gone wild or wrong against you, I mean, you just got to make sure that you're always putting the blame on where the blame lies. There's nothing wrong with the strategy. It's the execution that was a problem in this case. Yeah. And we saw potentially a hiccup in the road with the cover call situation on Hood. So we discussed it, and now we kind of came to a happy medium to where I feel like I don't have a bunch of freaking squatters on Robinhood Avenue. That's an unproven commodity to me, because the only thing that Robinhood's done in my mind is it went all crazy to like $40 and then it crashed back down and it's trying to make its way back the way that Palantir did, but it hasn't done it yet. It's still got a lot of stairs to climb.
Yeah.
I'm just saying, like, calling the investment what it is, right? Calling the ticker what it is. It went all crazy, and Kathy Wood's pumping it all crazy, and then it went down, and then now it's inching its way back up. That's all that Robinhood has done in my mind. I mean, that's the chart that I see when I put it on the 5-year.
Yeah, I agree. 100%.
So now, how does it look? I mean, do you feel good about it now?
Yes, I think this is good. And now we just leave it for the next month and see how it plays out.
And I feel good about it too, but I'm definitely monitoring those cover calls, guys. I'm not stupid. I do think that if we want to like calculate pot odds, and going back to that analogy that maybe a lot of you guys didn't understand, I think the chances of Robinhood going up right now are a lot higher than the chances of it going down, because it has a lot more tailwinds and headwinds right now. That's what I feel.
That's it. That's all. And we could be wrong on the tailwinds resulting in a material increase in the stock. That is very possible. And it is what it is. And it could go down. But if we're right about it, then it's just the question of, is there upside for us?
Absolutely. But I have a responsibility to my family, and obviously to the portfolio and everything else. And this is the metric that I look at, guys. I look at this metric right there. And the number is 2.5%. Amit, with your pretty little brain, tell me what that is. So you multiply that number times 2.5% and tell me what
15 million roundabout? Wait, no, that's not 250%. Sorry.
So you do 7.4 times 2.5% and tell me what number you get.
That's 1.8. That's 185,000.
How much is it?
185,000.
Awesome. So what does that mean to me? Come hell or high water, I feel like I need to collect $185,000 in premiums per month, whether it's calls, cash secure put, or rolling, because that's the only fucking metric that matters. Everything else is just noise.
Yeah, that's fair.
Everything that else is just noise. I treat it like this is my job, and I got to deliver 2.5% in premiums per month. So how am I going to go buy a house and not put a renter in? Because that's what's real, because the rest of it is just paper gains. But that 2.5% is real. So I really need to collect more like 3% so that I can keep 2.5%, because I'm going to have to be giving back here and there with the rolls and everything else.
And you have to give some to Uncle Sam too, right? So
the whole thing. So I actually shoot for 4%. Just so y'all know, it's hard to get 4% unless you're willing to do everything on right. So people always look at, oh my God, why is this guy selling so many cash secure puts on right? It's because I have to hit those metrics, because that is the metric that I look at. I'm like, okay, where's the portfolio at? What does it look like at 3 or 4%, so that I can capture and keep that 2.5%, because that keeps Uncle Sam at bay. That keeps the wife off my back. And it helps me to survive downturns. It helps me to build my individual brokerage cash, so that if there is a massive dip, I can use all of those premiums to go buy that dip, because at some point there's not going to be any more money to inject into the portfolio.
I agree.
So I'm just you guys, you're focused on one little position, and that's cool. That's down in distance in a football game, but I'm looking at the whole thing as the head coach. You know what I mean? I'm looking at, okay, well, how's that DB going with that matchup? I mean, there's just other stuff that I'm looking at. So there may be things that don't make sense to you guys. But I'm looking at that metric, because at the end of the day, it doesn't matter how your portfolio is set up. If it cannot yield you at least 2.5% per month, wheeling, dude, you are doing it wrong, because it's not a tax efficient strategy, because Uncle Sam's going to eat your lunch. You're not collecting enough individual and brokerage cash to stockpile your most precious asset, which is money. In this case, because we're in the money business. And you're not positioned to buy the dip. So I'm giving it to you guys. They might offend you. I'm sorry, dude. I am sorry, because that is not where my heart is. I want to show y'all how to do it. But some of y'all fall in love with these positions. You got to look at the whole thing like a head coach.
So let's speaking of covered calls, how would you answer this question? Christian says, I've got 10 covered calls on Palantir at $40 for December 2024. How would you navigate that currently, TJ?
Yeah, I would do anything. I collect theta. I collect theta because Palantir hasn't breached it yet. Thankfully, it's approached it, but it hasn't breached it. It gets to like 42 or 43. My God, don't get too behind. Roll it, or just buy it at close. Take your medication. If you feel that it's going to run up to like 45, well, then just leave the shares unencumbered and then put your covered calls at like 50 when it gets to 45. Sleep easy at night.
Meaning, if it goes to 45, roll the covered calls. Or sorry, if it goes to 50,
I'd roll at like 42. I wouldn't get too behind that stock because Palantir is. I mean, you gotta know how your horse runs, and Palantir has already proven to us that it doesn't make any sense.
So in general, the range is 10 to 15% above your strike, where you can still roll for a credit, right?
Yeah, my break even is my threshold. So however much credit you received on that covered call, as long as you roll before that break even occurs, which is your premium plus the strike price, that's your break even on a covered call.
So let's say Palantir goes to 42. You have a $40 covered call, but you are super bearish and you think Palantir is going back to 35.
Then you don't have to do anything.
No, but would it make sense to? But let's say that the expiration, you're in the money. Would it make sense to roll the covered call down to 35 and collect a lot of premium because you think it's going to fall back to like 32? Is that a strategy?
Yeah, but why put yourself in that position? Because now you're guessing, and then it's almost like you just bought an option. And you have to be right both directionally and during the time frame. The whole purpose of selling covered calls is that you could be wrong on the direction of the stock and still end up being right because you have a margin of safety.
So that makes sense. But let's say you actually were bearish and you think Palantir is going back to 35. Does it make sense still to collect that premium? You could be wrong, but let's say you think you're right. Is that a strategy or is that stupid?
Yeah, you can. You just got to be willing to live with the results.
Yeah.
See, because I always roll covered calls out. And then if it goes back down, well, I can always buy that covered call back and then wheel it back in. So I got to wheel it back in. You ever gone fishing, you cast it and you're reeling it back in, right? So I do that all the time. I did that with Tesla, dude. Everybody made fun of me because I had Tesla covered calls at 300 for January of 2025. And then about a month, two months ago, maybe 3 months ago, I was able to buy those back for pennies on the dollar. And then I started weekly and a monthly campaign. And shit didn't work out. And now I find myself at $280 cover calls for January 2026. Same shit. I'm just waiting for time to go by. In 3 to 6 months, I'll revisit and maybe I can wheel them back in and kind of go, reel them back in. And then start another monthly campaign because now I have a lot of dead money over there with Tesla. And it all looks good on paper, Amit. It all looks good on paper. But whenever I refer to dead money, I mean that now I have a portion of that 7.4 that is no longer giving me that monthly yield. So that's why I have to sell cash secured puts on margin to offset the mistakes that I have on shares that I'm not collecting actively covered call premiums on per month. So I put myself in a bind every time that I get into those situations.
That's fair. It's very, very fair to me. I think it's high level stuff.
I know how it works. You know what I mean? Because if you had a job and your job is you got to give, what is that? 1.8, what is that? 185,000 times 12. How much is that per year? A couple million, right?
Yeah, that is 2 million, 2.2. 2.2, yeah.
So your job was, because this is my job. This is what I do. And another portfolio is I have to deliver 2.5% in premium per month to justify my $17,000 a month salary.
Yeah.
So if I'm not delivering on those metrics, what do they need me for? So I wheel this thing like it's my job. And that's why I don't have as much emotion to these things as you guys think that maybe I should, or the way that you would, is because I'm like, dude, if I needed that money and that's all that I had, I'm going to do everything that I can in my power to keep that job, if that makes sense.
Yeah.
And my mindset's different, bro. Like we're like, I'm built different.
Can we look at SoFi? What's going on with that?
Yeah. So this is one where I'm drinking the Amit applesauce Kool-Aid right here with SoFi. And I've said the risk to the downside is minimal. I feel like the upside is very high right now, so I don't want to put a ceiling on it. And I'm playing this very Robin Hoodie, if you will. I've got the average cost of 740, 774, so that part's good. There's 6 open strategies, $800,000 in collateral, but only 10,000 shares are up for sale right now. So I've got the 500 covered calls at 9, and then everything else is leaps. So there's 2,400 contracts right now that I could sell on SoFi But I'm like, I really think that SoFi can go to $9. So that's $150,000 because of the shares that are owned. So I don't want to step over dollars to pick up dimes.
Right. So
Which
you're
is
so
with Robinhood.
exactly. It's the same thing. Yeah.
So I agree with your strategy. But also the other thing, just to go back, because we didn't finish the Robinhood thing, because this is the part that nobody gave me credit for in the chat, is I've already picked up some of that upside indirectly because, there's 100 cash secure puts over here at 21. What, am I going to get any credit for those? I'm just saying, you got to look at the entire picture. A lot of you guys are just focused on the down and the distance, and that's not what a head coach does. The head coach is anticipating everything. You can't, unless it's the last play of the game, you can't win or lose the game on one play in football.
Yeah, no, that's fair. And I think the $21 puts are a good strategy that we bought. I think we doubled down on it this week. We bought 50 more, or sold 50 more after 50 left.
So to me, that gives me the latitude to run a riskier cover call campaign, because if those cover calls are in trouble with them, these have to be printing mathematically, right?
Right.
And my idea is to keep these 100 cash secured puts on and on and on and on, and collecting $3,000, $4,000, $5,000 per month.
And again, for those that are new here, a cash secured put is basically we're making a bet with the market that Robinhood will not be below 21 the day of expiration. And if that's the case, we keep the $2,100 of collateral, 21 times 100 shares in one contract that we had to put up, plus the premium, which in this case we've collected about 46% of that premium so far.
So, I mean, during that discussion, we failed to mention that I am running the covered strangle on Robinhood.
Yeah.
So if those cover calls get challenged, okay, cool, I'll deal with them. But then that just means that these guys printed money. And that's what you have a stranglehood on those shares.
Yeah. And guys, we're right back to 39.97. If we bust through 40 again and we hit it a second time, maybe we'll hold it. So let's see if we can get there. All right. Can we look at Amazon, TJ? Because this is another position that we've added to in the portfolio.
Yeah, so this is what I call a safety net position in the portfolio, because I do have some riskier asset classes. So I'm essentially just looking for a place to hide money, and maybe I don't get the 2.5% a month here, but I'm okay with 1.5% a month to take a little beta out of the portfolio. So there's 2,500 shares at 179. So I'd give that like a C plus on an entry point. I don't think it's a great entry point, but it's okay. And I'm also willing to add to it if it dips to like 160-ish, like double down at 160. And then these shares were all for sale in December at 195. So I'm hoping for Amazon to print a little bit over the next couple of months. And I want to be chasing my tail for the next 3 to 5 years in Amazon. I want to look up one day and for this to have a $250, $275 handle. And strategically along the way, I want to keep buying 500 shares here and there, or sell cash secured puts. But the reason I don't choose to sell cash secured puts here is because the premium just sucks. I'd rather go get my put premium somewhere else and then just essentially just play these for the long side.
Yeah, and the premium, for those that are wondering why does it suck on Amazon, is because Amazon is a very good company. And so if it falls, people are willing to buy. Whereas if Celsius falls, there's not that many buyers. Therefore, the put premiums get a bit higher.
So what do you think? So what do you think about this, Ahmed? Do you think that this is good for the portfolio? I mean, because obviously there's Neo in the portfolio, right? So
I think Amazon's going to 300 in the next 5 years, no matter what. So yeah, I love this play. And I think that this was a good dip this week because of the port strike stuff that seems to be resolved. It comes down to their earnings, if they can get those margins to be above what the street wants, but they're going to get there, even if it's not this quarter. And so I like it.
Yeah, so that's what's going on with that one.
You want to look at American Airlines, because that one's printing. We have some covered calls, but that's still doing well.
Yeah, so the actual share ownership is doing pretty well, surprisingly. So up almost 17%. And then there's two strategies. I am running the covered strangle on here, or a version of it anyway. It's not officially a covered strangle because the amount of contracts on both sides have to match up.
Yeah.
And the expiration date. So it's a version of the covered strangle. So essentially all the shares are for sale at 11.50. So I'm already underwater there, but that's a positive place to be with these things. I'll just keep rolling and rolling and rolling. But yesterday I sold 100 cash secure puts at $10 expiring on 10/25. And what say you, Amit?
Wow. Wait, hold up. You're up 50% in a day?
Yeah. So it's time to close mathematically, right?
I think that's time to close, baby.
Yeah.
There you go. So to explain what's happening right now, TJ saw the volatility in the airlines yesterday. He sold 100 cash puts, which equals to 10,000 shares of ownership he would have to buy. He got 31 cents in premium. He's up 15 cents on that 31 cents. So he's going to collect $1,600, let go of 100,000 of collateral. How do we get the collateral? Because 10,000 shares times $10 is 100,000. And he's up 50% in 24 hours.
And it's, it's kind of just taking its time.
But see, again, how many places in the world can you take money and get 50% on it in a day? That's not something easy to do every day, but in this business, it is possible based on the volatility that you're working with in the market.
And you guys will see it there. You guys will see it there that 22 hours ago, I collected 3,100 and I just gave back 1,700 and I freed up the $100,000 in collateral. So whatever that math is, Amit, about $1,400 profit.
Yeah, not bad. 1,400 in a day off 100 grand is not easy. That's 1.4% in a day. Yeah. 50% of the total premium.
So it worked out.
Let me clarify. It's not 50% on the 100K for anyone who's concerned about that. It's 50% of the total premium we collected. So 1.5% in a day. That's 30% a month. That's annual. That's not usually what happens, but still 1% in a day is pretty amazing.
Yeah, but when that opportunity presents itself, I just thought that it was no-brainer stuff yesterday. So I did it. I did it because it was just like, okay, man, I feel like something's got to give here. And at the same time, there was an injection of cash that had gone into the portfolio. So I was looking for a place that I could essentially hide some of that money.
Yeah, Palantir still here at 39.96. We'll see if we cross 40 again and if we can kind of hold on to those levels. Let me real quick, the resistance at 40 on the order flow. For those that are just joining, someone did make a $15 million purchase 30 minutes ago at $40.
That's crazy.
Which is why I think we're probably going to break 40 again if people are willing to buy it that high. 10,000 shares at 40. All right, what else do we have in the port, TJ?
So I think another one that we can definitely worth talking about is TSLL.
Okay.
So TSLL was like at $14. I don't know, a week ago maybe. So what happened was I gave back $42,000 for the 773s because it was at about 60% profit.
Right.
And I put that money into Riot for the same expiration date and got like $1.16, I think. So I tied up less capital and I collected more premium. So I essentially moved all of this cash secured put money over to Riot to make a lot more money for the same time frame, less capital. And then collected a nice little dividend on TSLL, and I fixed all the covered calls because remember the covered calls were causing me problems mentally.
Yep.
Because they didn't have the same strike prices and expiration dates. So it was really like my OCD was like really out of control. And so I fixed all that. So now we have 20,000 shares for sale at 15 for December. I wanted to stay out of that whole 10-10 thing. And then there's still 400 cash secured puts at 673. There's still the long calls in place for January of 2026. And I started building I call them backstop trades. I started building a backstop trade for 573 cash secured puts January of 2026. So this position,
we're doing really good on this one, basically.
It's just on easy street, bro. It literally is on easy.
Well, and that's because Tesla has, by the way, guys, we did hit 40. We're hovering at 39.99, but we did hit 40. Yeah, the Tesla's done really well for us this month, right? And that's why it's been doing good. Yeah, there you go. There's the legit 4. It's actually holding it. It wasn't like 2 seconds like last time. It's actually TJ. That's kind of crazy looking at this, right? I mean,
that's nuts. Let me see.
I'm surprised the $12 covered call, that guy still hasn't exercised it yet from you.
Yeah, so Robinhood is showing 39.97 on mine. Is that what it's
Yeah, it
showing?
literally just went to 39. It was at 40 for a couple seconds, then 39.97.
Yeah, so I'm looking at the position on Robinhood right now. I mean, this is can we talk about this one for a little bit?
Yeah, of course.
I mean, this is a Palantir channel after all. So so that part looks really, really sexy. Congrats to all the longs and strongs and wrongs like myself on the cover calls. Don't forget about us. We're out there. So there's 24,000 shares at 1772. So I've been averaging up on this thing for a hot minute. But now we're up quite a bit of money on those shares, right? 534. So now let's just look at the down and distance. Like how it looks good, but how good is it, right? So we have the $12 cover call. So 5,000 of those shares are essentially going to go bye-bye at some point unless I'm able to fix it, which it doesn't seem like that opportunity is going to present itself. So there's that. So there's that. So there's a lot of money being left on the table there, Amit. If you go 12 from 40, what is that? $28?
Yeah.
Yeah. So 28 times 5,000 shares. That's how much money I'm leaving on the table. What is that? Do I even want to know? 28 times 5,000. So leaving a cool $140,000 of capital appreciation on the table. So this is to Amit's point earlier on Robinhood. That's what could happen, right? Robinhood goes up to like $40 because Robinhood announces that they're going to do collateral incentives and all this other shit. I mean, there's some things that they could do that probably wouldn't make any sense, but if it did make dollars for them, it would turn them into a top 5 brokerage really, really quickly if they're not already, maybe even a top 3 brokerage.
Yeah.
But I've got these shares for sale in the distance at 45, and I've got these shares. The bulk of the contracts are for sale at 35. January 2026. So I am definitely in a situation where I'll have to be babysitting these for the next 3 to 5 years. So keep in mind, whenever you do choose to sell covered calls on such an explosive position, the way that Palantir has proven itself over the last year or so, you got to know what it is that you signed up for. So what am I doing to remedy it is I'm going to continue to average up 500 shares at a time, just like I started doing back in the day when I bought the 5,000 shares at 14, 5,000 shares at 14, again, another 5,000 shares in the $20 range. And I've been buying 500 shares at a time, I think over $25 or $30, whatever it was.
Let me ask you a question. If you buy 500 shares at $40 right now and your 500 shares go away that you bought at 12, the average on Robinhood is still 17 at the end of the day, right?
Yeah. But I mean, there's still, so here's the thing. Like I could roll this right here and I could help myself out. Like rolling here helps me. How does that help me? Can anybody in the chat tell me how this would help me? Can you tell me how it would help me to roll it?
It would give you more time and you would increase your strike.
It would also give me a tax loss.
Yes.
Because I would lose money on that covered call legitimately. So that would help the cause, and it would also ease some of the pain, right? Because I wouldn't have to stare at those things so much. So I've thought about doing this. I was actually looking at it on my phone. That's why I kept saying Palantir, I apologize. It's because I was trying to do this roll. Like I literally was over here, at January of 2027. And I was like, what, can I just fucking make it like that happen? Like, is that worth it mathematically? And I couldn't do the stream and try to do the math. So maybe you could just help me out with it, Amit.
So you would have to pay $70,000 in a debit to roll Palantir up to 40.
But then I'd qualify for $140,000 in capital appreciation.
I mean, that makes sense if you're okay with paying 70 to get 140, which mathematically.
So let's talk about the risk, though.
Palantir. The risk is all those shares are tied up for the next 2 years.
No, that's not the risk. The risk is what if Palantir crashes back down to 20?
Oh, then yeah, well,
then I'm feeling like a fucking idiot.
Then that would suck.
Twice. So that is why I haven't been so quick to repair that position, because this one's the only one that kind of makes sense. Is I can get back to 50, get to a 30 handle. So now I qualify for, what does that admit? $18 in capital appreciation times the 5,000 shares.
Correct.
what is, I don't have my
That's
calculator.
90 grand.
Yeah, so essentially, I'm not getting quite a 2-to-1 on my money, but a little bit closer. And I'm also in a situation where I don't see a world where 833 days from now, Palantir is below 30. Because whenever you do this, because y'all might get in a situation where you find yourself doing this, you better be rolling to a strike that the underlying is not going to go under. Because, dude, you're going to really, really be hating yourself, because it's happened to me with our beloved Tesla.
Yeah, I agree.
Don't do it. Be careful. I'm just saying, be careful. That's why I'm really monitoring this situation. But that's the one that's starting to make sense, is putting out a 30 handle on Palantir makes me feel a lot better, because it's still at a pretty juicy valuation that Palantir has to grow into. There's a lot of people that have said, my God, like Palantir captured like 5 years of growth in 1 year, right, in the stock market.
Yeah, and I again, this is the debate I was not really a debate, but the conversation with Kris in the morning. It's like he thinks the 5 years of growth can't justify a 2028 price in 2024. The market obviously thinks so far there's going to be more than just 5 years of growth that people think, because it's going to be so exponential that they're going to front run that process, and they want the shares before it happens, before the growth, they see the growth. Someone's going to be right.
Yeah, I think Kris just has to admit that he continues to be wrong on Palantir. I'm just saying, like, he's been wrong. He was real hyped up. I remember seeing a podcast with Coach Strap.
Yeah.
And this was literally Chris Patel when Coach Strap announced something. He was like this. He was like that. You were on the podcast with him. He was excited about something. I don't know what it was. And then now Chris Patel has been the resident bear ever since. I don't know why. I don't know what happened
Chris is just not he's not a long-term guy. That's why, he sees the opportunity.
There's nothing wrong with that.
There's nothing wrong with that. No.
Yeah. Who cares?
Yeah.
Who cares? But all I'm saying is, you have to run your own race in the stock market, dude. Like, that's the only thing that I would ever want to leave you guys with, is I ran my race to the best of my ability, and I wasn't blessed with as much talent as some of you guys have. Good for you. But I did the best. I tried to do the best with what God gave me.
Yeah.
And the one thing that has also helped me from my poker background is I'm able to remain cool, calm, and collected whenever things aren't going my way.
Oh, that's a skill, bro. It's not easy to have that. Like when you're this $12 call, you're not crying about it. You're just you're navigating it.
I'm trying to figure out how to math it. That's it. And right now the math isn't mathing.
And remember, for the people that say, "Oh, TJ's so stupid, he sold a $12 call." He sold it when Palantir was 6, and no one thought it was going to 12. We were stuck here for 18 months at like $6 or $7, right? So it's one of those things where in the moment, and that's all you can do in the stock market. You have a set of data. Sometimes you have to try to see beyond the horizon, but if you can't do that in the short term, especially if you're trying to collect premiums, you get into some sticky situations. And this is the nature of this business. Like, if you're going to get into the wheeling business, you might have to give up some shares you don't want to give up, and you can't cry about it. You might have to buy some shares you don't really want to buy, and you can't cry about it. It's just how the business operates.
Yeah. It's just one of those things, it's just one of those things. So I've already accepted this loss a long time ago. So I've just been buying those shares over and over since they were 14, because my upside ended at 12.50. So in my mind, in my twisted little brain, I'm like, I only lost $1.50 on those shares, because whenever this was going on, the Palantir position was less than 10,000 shares. So I was like, wait, cool. Let me forget about that. Do over. You know what I'm saying? I bought this Palantir house. Shit didn't work out. I made profit, but not as much. Let me go build another Palantir house. And that's the house that we're in right now. And I'm kind of stuck on those now, because I've got 35 or whatever the hell the cover calls were.
Yeah, 35, 45.
Yeah. So, but I mean, it's much better. It was much better managed over here at 35 and 45 than I managed those at 12. So,
what would you say to this question? Why not just let the underwater cover calls go, sit in and forget it on a tax loss, unless it's different with the call options? You have to wait 30 days without buying Palantir before and after.
Yeah. No, dude. Right now I'm like 80% those shares are going to get called away.
Yeah.
I'm like, just because I don't want to mess up the books, because if I have to give back that 40, 50, 60 grand, whatever it ends up being, that goes against the 2.5% that I'm trying to collect per month, right? So it's a very substantial hit.
Right.
Whereas here, it's like it actually doesn't show up on the books, which is really, really cool. This is the Warren Buffett interview that people don't remember because it's not convenient. But his biggest losses are situations that actually don't show up on any financial statements, right? It's positions he didn't get into or whatever the case may be. So that doesn't show, that opportunity cost doesn't show up on any financial statements. I know it happened. It's just going to show, oh my God, I'm good. I bought them at 6, hold them at 12. You know what I'm saying? It doesn't show that, oh, Palantir was at 40 when that happened. You idiot. You know what I mean? None of that shows up on there. It's beautiful.
Yeah, none of that is going to make its way into that.
So it is what it is. So yeah, I think that I'll just take that $60,000 and probably just continue to buy Palantir shares with it. And 10 years from now, it is what it is. You know, I bought them, I sold them low and bought them high, like that portion of it. It's true. Mathematically, that's what happened. And people have kind of made fun of me, some of me in the chat. They can't believe that I'm buying 500 shares at a time. Well, that little strategy's worked out since I started doing that too.
Yeah. No, it has. It has.
Because it keeps going up. It's crazy. It's absolutely crazy. So can't think of anything else other than BITX. You want to talk about that bad boy right here?
Yeah, so that's just the leverage play on Bitcoin. So you just added more. I don't hate adding more shares to that. I think that's fine.
Yeah. So I gotta add more though. Did you see this number right here? Dude, it's driving me crazy. It stands up a little bit, doesn't it? It's kind of freaky.
Yeah, no, I feel you.
I don't even. I call it the voodoo position because it's actually trading like right at it too. I mean, this thing, I don't know. Bitcoin's the devil, the mark of the beast. I don't know, man. It's freaking me out a little bit, man. But I have the 30 Cascade puts at 24, and then all of the shares are for sale at 32. Zero emotion in this thing. I don't give a shit if it's $40 a mint. I'm cool just logging the win and moving on. You know what I mean?
Yeah.
I don't know that I want to be long this ETF because I just don't fully understand it. I don't even halfway understand it. I'm thankful that it exists because the premiums are really, really good, but it's just a rabbit hole that I don't necessarily want to go down on a long-term basis. I'm hoping that it works out and make a lot of money on both sides.
Yeah, and obviously if we're bullish on Bitcoin, you know, Bitcoin going up helps this thing, and we have Jan 2025 to see how it executes.
Have y'all been talking about China on your channel?
We have. Kris Patel has been engaging in the Communist Manifesto.
Dude, look
at Neo. Look at Neo.
There's things everywhere, bro. Like I gotta go read the Bible after this. Drink some holy water. So y'all want to grade that trade? I've been ridiculed for this one too.
Well,
about this one?
Look, the stimulus worked, and now you basically you get to hold on to them for what, 2026? That's the plan.
Yeah, all year. But I'm also selling cash secured puts, guys. Again, like keep in mind the way that I wheel stocks, it's very capital intensive. So even though you see these cover calls at $8, the only thing I'm looking at is I have these 500 leaps that at some point I'll exercise, probably September, October, November, December of next year. So I've got 5,000 more shares there, or whatever that is, 50,000 more shares. But I'm also going to be selling between 200 and 500 cash secured puts at all times on Neo to capture whatever upside I might be leaving down the road. Why? Because I want to position myself to just exit the position. And I'm not worried about the upside that I'm leaving on the table on these contracts potentially, because I got all of this money along the way, if that makes sense.
Yeah. That makes a lot of sense.
Because I don't want to put myself in a situation where I have to be in this trade until 2029, 2030. I've already been in it since 2020. And I want to lock in the win, and the goal is to make 250 grand. Now I think mathematically I might be able to make as much as 350,000 as long as I stay true and sell, the cash secured puts along the way. Right now I've only got 200 I wanted to have more. I considered adding another 200 right here because it's a lot of money. It's a lot of money. It's $9,600. Shit. What is that? So it's sell to open 200 contracts. If they would actually deliver 47 cents,
9,000 on what? How much collateral? 100. That's not 10%, basically. 9%.
And how long? In 100 and some days, whatever that was.
Dude, for $5, it's the stimulus. It's not a crazy.
Yeah, it's
well, boom, you went in.
Yeah, they can't not do. I'm just, hopefully it'll get filled. I don't know. There's no crackheads on New Avenue right now, but my God, like it just mirrors that feel like 30 to 40% a year if it works out.
Yeah. All right, let's end it on this last question, TJ, because I know you got to get out of here. But Tyler, thank you for the $5 super chat. He says, "Is margin a bad way to start doing cash secured puts?" So I know there's a lot of nuance to this.
Definitely.
So go ahead, you can answer that question.
The best way to start selling cash secured puts and cover calls is get educated. Get educated, even if you have to do some paper trading. Follow. Hopefully I'm able to give you guys some value. There's a lot of people out there much better talking about selling cash secured puts than I am. I think I'm just better at making money with it. There's a big difference there, guys. Like, I want y'all to listen to the mouthful that I just said. I think there's a lot of people that do a much better job of explaining these strategies than I do. I just feel I do a much better job of actually making money with the strategy. I don't ever want to claim to be the best wheeler. I'm trying to be the most profitable wheeler. There's a big difference there. There's a big difference there. There's a lot of people that are going to apply hard, fast rules and only sell puts on red days, only sell cover calls on green days. If you have leads, wait till you're up at least 25% before you start running the poor man cover call campaign. All of these things are all beautiful and they're very textbook. But I don't necessarily play within that textbook, because my big thing is, if I got a $10 million account, which I'm hoping that this will be here soon, that damn thing's got to generate $2.5 million a year in premiums come hell or high water. Right. Rain or shine, like the Pony Express, all that stuff back in the day. Like, I got to deliver the mail, right? So that's the game that I play. That's the metric. Like, if there's one metric that I look at, that's it. What's your portfolio value? How much premium are you generating? You're not able to generate it. Where are you going wrong?
Right.
Where are you going wrong? That's it.
So in the context of margin, we found this out. I found this out a couple months ago, but TJ's known this for a while. Your brokerage will give you margin if you ask for it, and you can sell puts on margin. However, the benefit of that is you don't pay any interest on that, because technically you're not borrowing the money, you're collateralizing the money. You only have to pay interest if you get assigned the puts. If you have cash, so if you have $100,000 in cash and you have $100,000 of collateralized puts via margin, if you have to buy $100,000 worth of stock, your brokerage is not going to use the margin money. They're just going to use your cash, meaning you will get to use the brokerage's money to collect the premium, use your cash in another place. But if you have to buy the shares, you don't have to actually pay 6, 7, 10%, whatever interest on that $100,000 to be able to buy the shares. The problem here is if you use margin on a cash secured put, that's a very risky cash secured put, because then if your odds of getting assigned are higher and you don't have the cash to back up like your actual physical cash in your brokerage, then you got to pay interest, right? And that's not a good situation.
It's very, 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 very important, dude, that you got to understand. Like, can we end it on this little thing right here, man? Because this is such a delicate topic, and the one thing that I don't ever want to do is lead anybody to financial ruin. I feel like I can't pronounce words today. I'm sorry. So the margin available is 3506. I'm using collateral of 3675. So this thing, if all of these cash secured puts were to expire in the money, there's only 1.274 of brokerage cash. So that is the equivalent of about a $2.4 million margin call.
Yeah. Yep. And that, if the market were to tank, that would be.
You guys mathematically see that? Give me a thumbs up on the chat. It's very, very important that I don't lose anybody here, because this is the kind of shit that can blow up your account.
100%.
Right?
If you sell puts on margin, you've got to really understand it. So it's something you need to research. Like I did a month worth of research before I even thought of doing it, because if you blow up your account just based on the strategy, it's not a good situation to be in.
But what you guys, that's why, again, you have to know what the play is. There's $750,000 already in transit to the portfolio. So I got ahead of it. That's why I started selling more cash secured puts, because there's about $1.5 million there that I normally wouldn't have on margin via cash secured puts right now. Mind you, I'm not paying any interest on any of this money right now. You only pay interest on margin if you take ownership of shares on margin. So I would have to take ownership of shares exceeding 1.274. At that point, after the $999 or whatever that Robinhood gives you for free, like to use on your credit card, if you will, without paying interest, then at that point, the big starts, right?
Right.
But I am already going to be able to eliminate 750,000 of that when the rest of the million goes through, because only 250 has gone through so far. It's in increments of 250,000. And then a couple of weeks after that, there's going to be another 500,000 that goes through. So this would only be more like 2.2 that I'm utilizing in margin. And there's going to be about 2.2 in CAF there. So I would be able to buy all of those shares and not actually tap into margin. That's why you gotta run your own race, if that makes sense.
Yeah, and the thing is, if the market were to have a nasty drawdown and you have a ton of open collateral on puts and everything takes a hit, it's a tough situation, because then even rolling those, if the market doesn't recover anytime soon. So it's one of those things where you got to be really professional with how you look at it. You got to understand the risk towards it. But the benefit, for those that are wondering, is you can use a brokerage's margin to be able to sell puts without having to pay the interest, as long as you know what happens if you get assigned on those puts.
Absolutely. The big thing is it's responsible. Selling puts on margin for us in this portfolio is probably responsible for between $500,000 and $750,000 of premiums collected,
right,
that I would otherwise not be qualified to sell.
Yeah.
And ask me how much money we've paid in interest.
Zero. So that's the thing. If you like are super bullish on Tesla before 1010, and you're like, I want to borrow $500,000 to buy Tesla at 250, I'll pay the 6% on the 500 grand because Tesla will go to 350, and then I'll sell and I'll give the 500,000 back and I'll make that profit with someone else's money. If Tesla doesn't go from 250 to 350, if it doesn't go according to plan, then you got to give back the 500K. That's not what's happening here. What's happening here is you're making an agreement with the market on, for example, Tesla to buy, I don't know, 10,000 shares at $200 or whatever. And you're using the brokerage's margin to collateralize that. And then it's a question of, do you win the trade or not? If you don't win the trade and you have the money, you can buy the stock without paying interest. If you lose the trade and you have to buy the stock on margin, then you have to pay that interest. But if you win, if Tesla stays above, if Tesla's $201 and your strike is 200, you collect all that premium using someone else's money, aka the brokerages, and you don't have to pay any interest on collecting that premium.
Yeah, so you got to make sure that you know how to manage a cash secured put gone bad. It's like more important than managing a covered call gone bad, because you're managing a covered call, it means you're making money, right? Because the stock's going in the right direction. But whenever you're having to manage cash secured puts gone bad, that means that you're like literally in the situation to where you're having to pay a lot more than the shares are actually worth. And so you're losing twice, right? You're essentially using money that you don't have, and you're overpaying for an asset class. If you weren't in this contract, you could go buy them on the open market for, 10, 20, 30% less than what you're actually having to pay for them. Correct. So again, just make sure that you're doing it on things that you're very, very highly convicted on. And also that you know how to roll contracts. Because like those Neo cash secured puts that I sold at $5, those are technically done on margin. I'm not going to take ownership of Neo at $5. I'd be rolling those things to $4.50. I'd be rolling those things to $4, and then I'd really, really consider taking ownership of more shares down there at those levels. So you gotta know what exactly it is that you signed up for, and also what are you going to do to fix the situation, to remedy the situation if it goes against you. Like you always have to take that into account.
Right.
You got to take that into account.
100%.
So anyway, please don't sell cash secured puts on margin if you don't know all the ins and outs and ins, upwards, backwards, forwards, left and right, in a circle, dot your I's, cross your T's, all of that stuff, guys, because it is a surefire way to blow up your account if you just don't know what you're doing and you're going to panic. I just don't want to lead y'all down that path, dude. I do it, but I'm also in a very unique financial situation, and I also have the temperament that I can't teach.
Yeah, and also at the end of the day, we're all adults here. Like, this is not financial advice. Everyone has to make their own decisions. This is hopefully an educational piece of content people are consuming. And you can interact with TJ on Twitter through DMs. I'm putting his Twitter in the chat right now. But everyone's got to do their own research to understand these risks.
Yeah, absolutely. I just wanted to drive that point home because we do live in a world where a lot of people do not like to assume responsibility for their own actions, and it's always the other guy's fault.
Correct.
So that's just the world that we live in. Yeah, and then your word of the day, my man.
All right. So first of all, please make sure to follow TJ on YouTube and Twitter. If you want to get more of him and get into his ecosystem, his world as well. Almost at 11,000 on Twitter, which he was at 10,000 last week. So he's doing his thing on Twitter. Word of the day, Twitter right there is in the chat. Word of the day is impermeable, which basically means not permitting the passage of something into something else. So the mountains, cliffs appeared impermeable, deterring any attempt to climb them. The raincoat was made from an impermeable material that kept me completely dry in the storm. Seemed like Palantir was impermeable. And then we got through to $40 freaking, which is not too bad. Not too bad at all. All right, TJ.
All right, man. Peace out. God bless.
Love you, man. Thank you for being here. We'll see you next week.
Bye-bye.
Bye. All right, folks. Palantir right now, market taking a little bit of a dip. Robin at 22.73, Palantir 39.87. We touched 40.10 and we held on to it for a good, like 5 minutes, oscillating back and forth. Now at 39.88. And do we close above 40? I don't know. If I had to guess, I do think we hit 40 again. I know it's not sticking at 40, but the orders that I'm seeing come in, these are big buyers that are buying at 40, and they don't look like retail buyers. I mean, I don't know if retail is buying 380,000 shares of this company at $40. Look at that. There's another 87,000 shares as well, right at 40. I mean, you definitely got people selling at 42. That's why it's struggling to stay above it. But look at all these buys, dude. $15 million at $40. That's pretty damn incredible. So that's what we've got right now in the context of Palantir. Again, I think we get 40 again, and if we can get 40 again, we can maybe make it stick. It's a Friday though, so it might be a little hard to get it to stick, but I do think it has. I do think it has a chance here. Palantir will probably be pinned just under 40 this week. Yeah, and again, the jobs report, it's really bullish, bro. That jobs report was very strong. I mean, I think that's partly the reason Palantir's at 40 right here, is because that jobs number just shows a lack of recession. A recession may not happen. But again, I also wouldn't be super FOMO-ish here. I would just like let it chill out. Like, I know some people still don't have their full Palantir position built out. They want more shares. I get it, but the market gives you opportunities all the time. And so, no one thought August 5th would have happened. It happened. We had plenty of pullbacks this year. On average, the market has a 10% pullback at least once per year. That happens historically every time per year. And so 2025, that could happen again. Or just, holds on to the momentum and earnings reaccelerates to such an extent that we don't see the low 30s again ever. I don't know, but I don't think we have enough data to be like, all right, it's going to $50, $55 right now, right? Especially after being up 130% right now. But these buys that are coming in on the order flow definitely look like there are people that believe it is done with the low 30s and they're ready to go higher. So again, my philosophy has been, if you're long and you believe in it, stay long. If you want to take some profits to make you feel happy about the fact that you have some gains, I know a lot of people that have done that. If you want to sell some covered calls to hedge against the downside, I think that's fine. And if you have a really good average, I would say try to protect that average more than just worrying about premiums. But if there's a long-term thesis on this, then even if it falls back to 20, that's just more opportunity to get shares. So it's really just not that complicated here. You kind of just allow them to execute and see how they have to do what we all believe they can do. Rocket Lab right now is $9.90. Wow, Rocket Lab's up 8%. Okay, so Rocket Lab a little bit away from $10. Rocket Lab's another one that's been fighting for 10 this whole week. It touched them many times, closed below it pretty much every day, but now looks like it might have a chance to get there. Again, that short float is probably covering on Rocket Lab at least a little bit, which is helping. Steve says, got to run. Safe travels and happy birthday. It's not my birthday, but appreciate you. Thank you for being here, bro. Thank you for joining the stream as well. Midwest says, I still haven't rolled my 39.50 covered calls for today expiration. Yeah, I would give it another hour. I mean, we're right near 39.50 at 39.80, but we're closer to 40 than we are 39.50. So I would give it an hour and then kind of see how you want to navigate that Midwest. But it's a good problem to have. It's a good problem to have. My birthday's not tomorrow either. Dude, I'll be 27 this month. I remember when Palantir was 25, I was like, well, me and Palantir turned 27 during the same time this year. Palantir decided to fucking turn 40. Left me in the dust. So Palantir is deciding to just go a totally different route. Doug says, got to run, installing 12,000 worth of new washing machines today. I love it. Your portfolio sees Palantir go to 40, and then you're putting in some new washing machines at your laundromat. I love it. All right. I think that's it for me as well. I'll be back at 3:45. I believe we'll have Steve on the show today. We will also have Palantir Weekly. So Arnie won't be here today because Arnie's like on a little mini vacation, so he won't be here. I did do a podcast with him. That'll come out next week, and you guys will see it. Robin at 22.69, Palantir at 39.89, S&P at 569.08. But we will have Palantir Weekly tonight at 11 p.m. as always. We'll talk about everything going on in the world of Palantir. And then tomorrow I'm out. Also, I'll probably have a live stream tomorrow with Adam, not Adam Bergman, another Adam who deeply studies the government business. He found a lot of like just little things about the government business and how it's scaling. That'll probably be at 11 a.m. on Saturday Eastern. So market close in a few hours. Then we've got the Palantir Weekly, and then tomorrow we'll have another Palantir stream in the morning at 11 a.m. And then I will take a flight. I will go to India, and I will do the market open at 6 p.m. every day, no matter what. And that's what we got to do. Arnie is rich right now, dude. Arnie must be loving this. Arnie must be loving it. So if I don't see you guys for the next couple of streams, thank you all for being here for the past week. Thank you all for being here for the past month. It's been an exciting time. It's been a hell of a month. Dude, September was a crazy month. September, you had AIPCon. You had all these different things happen with Palantir, S&P inclusion. So September was just a wild, amazing month. AIPCon was really special. That CARP video was just awesome. And S&P 500, that was big. And now we're in October. October, started off with a bit of volatility in the broader macro, but jobs report came in good. We'll see what happens with everything else. And then we got to close out the year. We got 2 more months for the year. Yeah, September wasn't even red. It wasn't even red. Like it went against a 5-year trend, which is just incredible, dude. And again, we talk about it a lot, but this is not, to me, just irrational exuberance. On certain stocks, maybe sure. But I mean, we look at for a good hour every single day before the market opens, we look at all the data that's coming in, the implications of that data, the jobs, inflation. Yeah, we put the pieces together. And when you put the pieces together, you get a narrative that says, hey, money should be allocated into equities. And that money has a better shot of giving you a return, even if the risk reward is not amazing right now, given the market has run up this year, than other asset classes. And after the election, which is the final thing we got to get through, then I think November, December can potentially, go strong. And then we get into 2025. And then 2025, we'll see what happens. But at least to end out 2024. It's been a hell of a year, right? It's been a year of just bulls fighting to maintain the bull run. And even though it's been very bullish, it's been like you had a lot of ups and downs. There were a lot of random stuff happened. You have to navigate it. But and we still have a couple months left. We still got to get through these next couple months. But it seems like October is hopefully going to be okay. And then the rest of the month as well, potentially, will be okay. All right. That's it. Again, thank you guys from the bottom of my heart for being here every single morning. I cannot say enough how much I appreciate it. If I don't see you guys until the India streams, because some of you guys will be gone for the weekend, you won't catch the weekend streams, then thank you for being here. Again, it really, really, really means a lot to me. I want to make it very clear that I do not take this for granted. It's a big responsibility to be here every morning. I enjoy it more than I can ever imagine. It's the coolest thing in the world. Palantir right here at 39.92. It's very, very exciting. I know as Palantir has risen, a lot of people have discovered the channel and they're kind of staying for the market open, even if I'm not talking about Palantir, and they're getting a gist of kind of what we're trying to build. And I'm just really appreciative for people that stay, for people that enjoy the content, for people that tune in, for people that get value of it, and for people that continue to come back. It's really cool, dude. It's really, really, really special. And I just want to keep building it. And I think this year we built it the right way, which is just, to me, it's just be consistent and like try to get better, right? That's it. Those are my two forms of life. Be consistent, try to be better. Not everything's gonna be perfect. You're gonna get some things wrong. You're gonna, like mess up here and there. You're gonna make some mistakes, but like learn from that. Like really learn from that. Try to internalize those things, because you're live, right? You will make mistakes when you're live. It is what it is. It's not a you can't edit anything out. And learn from that. Try to get better. And then show up, and that's why the India thing, it's like even in India, it's like I made it very clear to all my family in India. It's like these 2 hours I've got to be here because what we're building here is very special. It's very important to me. I think this is the beginning stages of something that could become much bigger over the next 10, 20 years. I love doing it too. I was on the phone with someone last night. Who was on the phone with? I think I was on the phone with Steve, and he was just like, dude, you're like talking 6 hours a day. It's like, how do you do it? I'm like, dude, Steve, by the way, Steve writes Seeking Alpha articles. He'll write like 2 articles in a day, typing for 6 hours. Like, how do you type for 6 hours a day? It's like, you love it, right? You love writing Seeking Alpha articles, so you can sit there and type. I can't type for 6 hours a day. I'd get bored. Like, it's just not me. But yapping, I got 6 hours, dude. I got yap for 16 hours because like, I don't know what it is about yapping. It's something about yapping that's fun. And then so hopefully the yapping can create value, and you can keep doing it in a way that gets people to care. So I'm just very appreciative of this. It's a hell of a job. It's a hell of an honor, hell of a privilege. And obviously Palantir going up has definitely helped over the past couple of months. And I try to keep a really level-headed perspective on Palantir. I'm very bullish, but I'm also not trying to be GameStop to the moon type of bullish, even though that's also very fun, but also trying to balance that with a ton of perspectives. And you got people in the community like Arnie, Matt, Amir, all the people on Palantir Weekly that help build out the balanced perspectives and the hopefully really strong analysis that this community has been producing for the past 2 years, by doing the Palantir Weekly and contributing as much DD as we can crowdsource to everybody else. And so that's it. It's been fun. Been a fun September, and now it's time to travel across the world. Safe travels, Amit. Thank you very much. Jim says, I was here when you only had, I think, less than 800 subs, bro. Early 2022. Yeah. It's been a long journey, bro. It's been a long journey. Like sometimes I have to remind myself, dude, I wake up every morning and I just talk for 3 hours into a screen, and then take a 4-hour break and then talk again for 2 hours into a screen. And, sometimes there's a decent amount of people that actually care about the perspectives and ideas you're building out there. And again, the other thing about this job that I think it's important to understand is it's a very people-oriented job. Like the audience is the package is the show or the product, and the audience is the receiver of that product, right? And so you've got to deal with criticism sometimes. You got to deal with people saying this, people saying that. You got to deal with people saying, hey, I didn't like how you said this. Like that's all criticism you have to take. You can't, if you have a thin skin, there's no way you can survive. But also if you don't have an open mind to be like, yeah, I did kind of sound weird there, or that didn't make any sense, or that analysis is wrong, or I got those numbers wrong. Like you got to just be so open to all of that. You got to be a people person. You can't start cursing people out on stream if you see a crappy comment and, you're like, all right, fuck you, I hate you. Like you can't do that. It's just that's not the type of personality that survives in this game. It's like, you can't be triggered by that. You have to be able to be humble enough to take the punches and keep going for the privilege of being able to do this job, which I just take so seriously. Because it's performing. That's what I love to do. I was on the phone with Steve. I was on the phone with Derek last night, not Steve. I think I was on the phone with Steve the other night. Derek is running his startup. You guys don't know too much about his startup, but I think I'll do a podcast with him soon, and he'll tell you more about it. But he officially just found a co-founder for his startup, and he's been an inspiration this whole year. Again, Derek is 54, mega successful. He does not need to like build a startup Palantir 39.99. It looks like we might crack 40 again. But he's bored in life. He's really bored. And he's like, you know what? I'm going to start a startup. And for the past 9 months, I think it's an incredible idea. And I genuinely think it's like a $10 billion idea. And he has all the best venture capitalists in the world that are ready to fund it and give him all the money. But he needed a co-founder. He needed a real co-founder. And yesterday he found him. Well, he's been, talking to him for the past month. But yesterday they're like pretty much confirmed it'll be his co-founder. So he called me up and he told me about it, and I was just so happy for him because that it's a testament to like being resilient and like believing in a vision and an idea and going through hell and like going through hundreds and hundreds of meetings, meeting all these people, vetting people, but like getting to the end result. And it's the same with YouTube, right? It's like every single day waking up, being there when there were literally 40 people, which by the way, when there were 40 people, I swear to God, my mentality was, oh my God, 40 people. Like it was never like, oh, it's only 40. It's like, I think that's the other reason the channel has grown. It's like I've been so grateful for 40, 400, and maybe one day 4,000 that it's been like, I just one could argue I was just happy to have an audience, whether it's 40 or 400. And the number really doesn't matter. The fact that people are there is what matters. The number just goes up as a byproduct of just like continuing to be consistent. But the energy of the show shouldn't really change when that happens. So when I was on the phone with him, he was just like, dude, I don't understand how you're talking for 6 hours a day. Steve has also said this to me, but Derek is the person I was talking to last night. And I was like, yeah, but you're 54 and you're building a new startup, like, it's like you're also, and you don't need the money, obviously. So it's like, I'm hungry right now. He's like, you need to take a little bit of a break and just relax. I was like, no, bro, I'm in my 20s. I'm hungry. Like if you're building a startup at 54, what do you mean take a break, bro? I was like, take a break? It's going to be 27. This is not the time for a break. This is the time to fucking go for it, bro. This is the time to absolutely go for it. Because one day you'll wake up and hopefully it doesn't guarantee success, but if you tried your hardest, you might wake up in any field of life for everyone in the chat that's trying to build something. And you're like, holy shit, like you worked your ass off to get there. And again, that perspective is also based on my understanding of capitalism, which is something I think a lot of people like need to internalize, which is that you get what you work for. It's not perfect. A lot of times it doesn't work out like that, but for the majority of the time, even if it doesn't work out like that, sometimes you work hard, you can get the benefits of it, but you got to put in the work. And it's just so fun that this is the work I get to put in every day. And I'm so grateful for everyone being here as well. All right. I think that's it. Are you going to vlog from India? Yeah, I'll probably make a couple vlogs. I'll try to make some vlogs and I'll post them separately. And I'll definitely follow me on Twitter if you guys really care about what I'm doing in India. I'll post some stuff on India. I'll post the streets of India and all that stuff. So you can follow me on Twitter and we'll put some good content out there for India. I'm really excited. Dude, the last time I've been to India was 2019, dude. I still have pictures in my phone. It's been so long. Last time I went to India, I was on my way to becoming a senior in college. Life has changed, bro. Life is so different. Like the guy I was back then is just like not the guy that I am now. And like so many things have changed since that time. And it's just wild because you're going back to this place that's like, to me, it's this magical place that I've loved for my whole life, and I don't get to visit it often. So it's going to be a quick 2 weeks, but I think it'll be special to see everybody there. Palantir right here, trying to touch 40 again, one more time. Dude, it would be nice to touch 40 right before I leave, just to see it at 41 one more time. There we go. We got it right before I leave. There we go. We got it. Touched it. That's the third time it touched 40, bro. Or it's probably like the 7th or 8th time, but like the third actual time it got to that level after declining from 40 back into like the 3990s, 3970s. There we go. There we go. Incredible stuff. Hood at 2275, Robin at 3998, S&P 569.6 right now, or 0.58 right now. Back then you hadn't met Carp once. Yeah, that's true. 2019, I had not met Carp. I did not know what Palantir was, bro. I was a Palantir volume, by the way, 40 again, 89 million. Sorry, not 89. $89 billion market cap, 33 million. But the volume is nothing, bro. The volume low key is not a lot. 33 million shares for Palantir that does 70 million a day. Not that crazy. And we're still at 40. Yeah, I don't know what Palantir was in 2019. Dude, in 2019, I was focused on getting through my senior year of college. And just like, navigating what life would be like after college. So this is me going back to India after years and years of trying and doing a bunch of different things, and now being in this situation. No meetups in India, dude. It's gonna be hard to do meetups because it's gonna be so quick, dude. It's gonna be like, I'm gonna come back to India for an actual like month-long journey because I want to like actually explore and see people and all that stuff. But I think 2025 will be the year of travel. I think I'm gonna make a commitment to myself that once every month, even if it's just a state in the United States, a domestic weekend, I will go out and do a meetup with a group of people, and I will let people know so they can just come out and hang out in one time per month in 2025. Maybe even if it's not international. Now I do want to visit UK, and I told Arnie, like, he wants me to come to Italy. I think I should just do a summer tour in 2025 of Europe and see everything in Europe, because I still really, I've only been to Stuttgart, Slovenia, and Zagreb, Croatia, and I didn't really get to explore during that time. Palantir 40.02, we're holding it a little bit. S&P back to 570. So yeah, I will be traveling more, and but these 2 weeks in India, there's gonna be no way I can meet people. Shout out to my uncle in the chat. He's here. Manish Manjal, but you were still yapping in 2019. See, I told you guys, he watches the street. He watches me yap. Dude, it's going to be so much fun. He's going to be on the live streams. You guys, he's one of the smartest guys I know, dude. One of the smartest guys I know. And he came, we talk about people coming from the bottom. I don't think I really came from the bottom, dude. My parents had a apartment when I was born, a house in America. We're okay. My uncle in India, we're talking about poverty, bro. Talking about real poverty. And he got out of that situation, became an accountant, learned how to invest, had a family. He also had a love marriage, not an arranged marriage. That's another thing for my uncle. For all you guys saying you guys are going to find me a wife in India, he fell in love. He didn't have an arranged marriage. So, and he has a kid right now, and I haven't seen my cousin in 5 years. How old is he? He's like, I think he's 12 now, 11 or 12. Last time I saw him, he would come up to me, try to play games on my phone, and I would make him hug me to use my phone, because he never would give me a hug. I was like, I'm only letting you play Subway Surfers if you give me a hug. And so then he gave me a hug, and so it's going to be very interesting to see if he's like that at 11 years old, where he's not as easily manipulated as he was when he was like, what was it, 5 years old, 6 years old? But 13 now. Wow, he's 13. It's been so long, man. It's been so long. But yeah, man, my uncle really, he got it. He came from the bottom, dude. Like, he really, in India, because my mom, her sister, and my uncle lived in a small house. I still remember that house, even though they sold it a while ago, but I remember like it was yesterday. And I remember being in that house, dude. It was a little, rough. It wasn't the best place in the world. Wasn't a mansion or anything like that. And so to come from that, become an accountant, make the money, be able to invest, actually have a lifestyle for yourself. It's very special. And honestly, he's the first person who taught me about investing in 2019. Now, I wasn't really like super into it, but I remember he like in 2019 when I came, he was explaining to me what it means to invest in the stock market. I think actually he's the reason I like downloaded Robinhood, or I like looked up for a brokerage, and I put a couple $100 into that brokerage, and I said, all right, I'll like start playing with this. So technically he's the one who like started talking to me about investing 5 years ago. I didn't start taking it seriously, realistically, till I was 21, till I was 22-ish. And he started talking to me when I was 20-ish about investing. So it took a couple years, but, now we're here. Now we do a daily show every single day about the stock market. $40.06, folks. I thought this would happen because we touched it so many times. It seems like we would keep above it. If we close at 40, I don't know what to say. I mean, like, it's one of those things where you sit back and you're like, all right, here we go. Like, it's one of those days. It has the momentum. Again, it touched it many times. We're getting a lot of orders coming in. So I think there is a shot to close at 40. We still have a lot of hours left of the day, but if it can maintain this 40 to 40-10 range, then maybe we can actually close above $40. Pretty cool, dude. Even remember last Friday, I think it closed at 37 or 36, and we were all like, man, that was a good Friday. And now this Friday, it's like, 40. So even 2 days ago when it closed at 37.50 or close to 38, we're like, that's a good day, And now we're looking at 40. Thank goodness I didn't sell the covered calls, dude. I was so close. 2 days ago. I was so close. I didn't do it. All right, it's oscillating right there, 39.99, 39.98. So there's still sellers there at 40. There's still plenty of people ready to just dump at 40. The buyers are being resilient, dude, though. It's not like it's in the low 39s, high 38s. Like, it is really playing in this $40 range basically the whole day. Basically been 3 hours just playing right at these levels. Young CEO, I remember that being happy that Palantir hit at 12. I was thinking of that the other day. I remember I hosted an emergency Palantir shareholder meeting when we hit $12 and Sachin came on the show. And I remember talking to Sachin when Palantir was at $12 because we were up from $6 to $12. And I was thinking about that was May of 2023. We've been through so many of those emergency meetings now. And now we're here at $40. All right. Amazing stuff. I'll be back at 3:45. So yeah. Thank you guys. We'll do the market close, then we'll do Palantir Weekly. If I don't see you in any of those two streams, I will see you in India, 8:45 a.m., same time on Monday. And we will keep the show going, even on the road, and keep going from there. Thank you, guys. I appreciate it from the bottom of my heart. Again, I cannot stress that enough. Thank you for joining every single day. Do not take your time for granted. Spend your time with me every day. It means the absolute world. It gives me the ability to do this, and hopefully it creates a lot of value for you guys as you get to enjoy and kind of just hang out for 4 hours and talk about the markets. So thank you, everybody. It means the world. I'll see you guys at 3:45 for the market close. Bye, everyone.